So let's dive into this cautious phase of the DeFi market. While innovation is definitely still buzzing, the recent uptick in security incidents has made many investors pause.
Absolutely, Chase. It seems like for every step forward in innovation, there's a corresponding risk that's been magnified, especially regarding exploit volumes.
Precisely, the risk indicators we're seeing, like governance weaknesses, are not just technical issues, they undermine user trust in these protocols.
Trust is crucial, especially in a space that thrives on decentralization. If users feel vulnerable, they might pull back from experimenting with new DeFi tools.
Exactly, and it's not just individual projects at risk. The entire ecosystem could suffer from a lack of confidence if these issues persist.
That makes sense. It's fascinating how regulatory scrutiny is also increasing, which can either stifle innovation or push projects towards better security.
Indeed, regulations can act as a double-edged sword. While they may bring more structure, they can also deter the very innovation that DeFi is built upon.
Hmm, it's a delicate balance. What do you think are some of the essential measures that DeFi projects could implement to enhance security?
Well, first off, audits should be non-negotiable. A thorough, independent review can catch vulnerabilities before they become problems.
For sure. I know some projects are now opting for continuous audits, which seems like a smart move given the fast-paced nature of this market.
Absolutely. Continuous audits can help maintain security standards as code evolves, but they also require ongoing investment.
And with market conditions being cautious, securing funding for such measures can become a challenge for many projects.
True, it puts pressure on teams to prioritize short-term gains over long-term stability, which can be a risky strategy.
Yes, especially when we're seeing that the bedrock for large-scale growth hasn't stabilized yet. It's a tough crossroads.
Which makes it crucial for teams to identify their unique value propositions while also addressing security concerns proactively.
Right. So, do you think focusing on quality projects is the best approach for investors right now?
In this current climate, yes, quality over quantity can help mitigate risks significantly and protect investor capital.
That's an important point. It seems like the era of just chasing yields might be coming to an end.
Very much so. Now investors are becoming more discerning, looking at project fundamentals rather than just potential returns.
It's interesting how that shift in mindset could reshape the DeFi landscape. Do you think it will lead to more sustainable growth?
I believe so. A focus on sustainability and security will likely encourage innovation that aligns more closely with user needs.
And that could foster a more robust community of users and developers, which is what DeFi really needs right now.
Community engagement is key. Encouraging user feedback can help projects adapt and grow while building trust.
I agree. Speaking of trust, how do you think the narrative around safety is affecting new entrants to the market?
New entrants might be feeling hesitant, especially when they see headlines about exploits. It's crucial for projects to actively communicate their security measures.
That's a good point. Transparency is vital in rebuilding that trust, especially for those who are new to the space.
Without a doubt, it's all about managing perceptions while demonstrating real-time security efforts.
And that links back to the idea of quality projects. Those that prioritize safety will stand out in this environment.
Right. Investors are looking for assurance that their assets are safe, which means projects need to deliver more than just innovative features.
So, what do you think are some of the top criteria that investors should be looking for in quality DeFi projects?
First, look for a solid team behind the project. Their experience and transparency can say a lot. Next, examine their security measures.
Right, and also the community engagement aspect. Projects engaging in active dialogue with their users tend to be more trustworthy.
Very true. It's also vital to consider their governance model. A decentralized and transparent governance structure is a good sign.
Yes, especially as we see increasing governance weaknesses across the board. Strong governance can lead to better decision-making.
Absolutely. And finally, the project's roadmap should be realistic yet ambitious, reflecting their long-term vision while being adaptable.
Well said, but how can investors differentiate genuine innovation from mere hype?
Good question. It often comes down to the substance behind the marketing. Deep dives into their tech and user reviews can reveal a lot.
So it's about peeling back the layers, right? Digging deeper than surface-level claims to find the real value.
Exactly. The crypto space can be noisy, but taking the time to research can yield valuable insights for investors.
And it's not just about finding the next big thing, it's about identifying projects that will still be around in the long term.
Totally. Long-term stability and potential should always be a priority for investors, especially in uncertain times.
So, as we look toward the future, do you think we'll see a consolidation within the DeFi space?
Consolidation seems likely as weaker projects either get acquired or fade away, which could streamline the ecosystem.
That could potentially lead to a stronger network of protocols that are more resilient and capable of withstanding scrutiny.
Definitely, the stronger players will likely emerge, taking the lessons learned from this cautious phase to drive innovation.
And those lessons are going to be crucial for the next wave of DeFi tools and protocols that come to market.
Absolutely. Adaptation and security have become the cornerstones for any DeFi project aiming for longevity.
Well, it seems like we've only scratched the surface of what the future holds for DeFi. There's a lot to consider.
Indeed, and as the landscape evolves, it will be interesting to see how teams respond to both challenges and opportunities.
I think it's safe to say that while the cautious phase presents hurdles, it also offers a chance for refinement and growth.
Absolutely. With a more cautious approach, we can hope for a more resilient DeFi environment in the future.
That's a hopeful perspective, Chase. I'm eager to see how this all unfolds in the coming months.
Me too, Sabrina. It's a pivotal time for the DeFi space, and I'm optimistic about what's to come. One key aspect to consider is the importance of security audits for DeFi projects. As the number of exploits rises, teams need to prioritize comprehensive audits and demonstrate transparency to build trust with users.
That makes sense, Chase. Security audits could serve as a badge of honor for projects, helping to differentiate quality protocols from those that might be more susceptible to risks.
Exactly, and we're seeing some projects invest heavily in this area. However, audits alone aren't a silver bullet. Teams also need to establish robust governance structures to handle potential vulnerabilities.
That brings up an interesting point about governance mechanisms. Weak governance can lead to poor decision-making, especially during crises. Have you seen any innovative models addressing this?
Yes, some projects are trialing decentralized autonomous organizations or DAOs to empower community governance. However, these structures can also face challenges, particularly when dealing with large-scale decisions.
It's fascinating how governance can really make or break a project. The balance between decentralization and effective leadership is such a tightrope walk.
Right, and it's not just about the technology, it's also about the culture that the team fosters within the community. Engaging users in decision-making processes often strengthens the project.
Community engagement is crucial indeed. It's a significant factor in building loyalty, especially when users feel they have a stake in the platform's future.
Absolutely, Sabrina. However, we must also acknowledge that community sentiment can shift quickly, particularly in a volatile market. Misinformation can easily sway opinions.
That's a significant concern. How do you think projects can combat misinformation effectively?
Consistent communication and transparent updates are essential. Projects should prioritize educational outreach to ensure users understand the evolving landscape and potential risks.
Education could foster a more informed user base. But in a space that's constantly evolving, do you think it's realistic to expect users to keep up?
It's a challenge for sure. Project teams can help lessen the burden by providing easy-to-understand resources and hosting regular AMAs or webinars to address user concerns.
That sounds like a solid strategy. However, I wonder if the pace of innovation might outstrip even the most diligent efforts to educate users.
True, the rapid pace of change can overwhelm even seasoned investors. Users must learn to assess risk-reward scenarios quickly and develop a more adaptive strategy.
Adaptive strategies could involve diversifying portfolios based on risk tolerance, but how can investors evaluate which projects are worth the risk?
Analyzing the team's background, project transparency, and community engagement are key indicators. Investors should also look for projects that have established partnerships and real-world use cases.
Partnerships can indeed signal credibility, but it's also crucial for those partnerships to result in tangible benefits for the user.
Exactly, and metrics like user growth and transaction volume can provide insights into a project's viability. It's a mix of qualitative and quantitative assessments.
That blend of analysis can be complex. But as you mentioned earlier, governance and security are foundational elements that shouldn't be overlooked.
Right. A strong foundation allows for innovation to flourish. Without it, the risks can outweigh the rewards, leading to a shaky ecosystem.
It's all interconnected, and I fear that a few high-profile failures could shake investor confidence across the board.
That's a valid concern. Market psychology plays a significant role in DeFi, and fear can lead to sudden withdrawals that further destabilize the market.
Certainly, and this could trigger a downward spiral if not managed properly. What mechanisms do you think could mitigate such panic?
Implementing circuit breakers or liquidity pools can act as a buffer against sudden market swings. These mechanisms need to be well publicized to reassure users.
Such safeguards could definitely provide some peace of mind. However, implementation must be seamless to not create friction for users.
Absolutely. The user experience must remain smooth, especially as new users are entering the space. Complicated processes could deter participation.
User-friendliness could indeed be a decisive factor in attracting newcomers. Simplifying on-ramps and interfaces could help demystify DeFi.
Exactly. Intuitive design can make a huge difference. However, teams must also balance simplicity with the complexity of DeFi functions.
It's a delicate balance to strike. But ultimately, functionality and security should remain the priority, even in the face of simplification efforts.
I concur. If projects can deliver a secure yet user-friendly platform, they may set themselves apart in this crowded landscape.
Indeed. And as barriers to entry lower, we might see an influx of diverse participants bringing new ideas and innovations.
That's the beauty of decentralization. Different perspectives can lead to groundbreaking solutions that might address current inadequacies.
Yes, fostering diversity can inspire creativity. But do you think there's a risk of too many ideas diluting the effectiveness of solutions?
It's possible. When too many voices compete, it can lead to noise rather than constructive dialogue. Clear focus may be necessary for coherent development.
Focus could be the key to effective implementation, yet innovation thrives in chaos. It's an intricate paradox.
Absolutely. Perhaps establishing task forces around specific challenges could harness diverse input while maintaining direction.
That's a pragmatic approach. Focusing on particular issues could streamline efforts and produce tangible outcomes.
Precisely. Such focused collaborations could also build community spirit, as users feel they're part of solving real-world challenges together.
Community-driven problem-solving could shift the narrative from merely speculative investments to meaningful contributions.
Yes, and it could reinforce the notion that DeFi isn't just about financial gains. It's about reshaping how we think about finance altogether.
A paradigm shift in finance is profound. However, it will take time for mainstream adoption, especially given the regulatory headwinds.
Regulatory scrutiny can be a double-edged sword. While it may bring legitimacy, it could also stifle innovation or push projects offshore.
Exactly, it's a tricky landscape, and teams may need to navigate these waters with caution while advocating for clear regulations.
True, collaboration with regulators could help bridge the gap. Projects should engage in constructive dialogue to align interests.
Engaging regulators is essential for long-term sustainability. Without mutual understanding, the industry risks being stifled by outdated frameworks.
Authentic collaboration could lead to more adaptive regulatory frameworks that accommodate innovation while protecting users.
That could create a win-win scenario, but it requires active participation from all stakeholders, which can be challenging to organize.
Indeed, it also demands patience and transparency from the projects involved. Otherwise, mistrust can grow in both user and regulatory circles.
Trust is a precious commodity in this space, and it must be earned through consistent actions, not just words.
Absolutely. Actions speak louder. Projects that consistently prioritize security and user education are likely to build long-term loyalty.
Long-term vision is crucial, especially in an environment that often emphasizes quick profits. Balancing short-term and long-term interests is essential.
Well said, Sabrina. Projects that can maintain this balance are more likely to withstand market fluctuations and emerge stronger.
A resilient DeFi ecosystem rests on the principles of responsibility and innovation. It will be intriguing to see who rises to the occasion.
Indeed, and as we continue to witness this evolution, the lessons learned will shape the future of decentralized finance.
I can't wait to delve deeper into these developments. The future of DeFi is indeed full of possibilities, albeit with inherent risks.
Absolutely, and that juxtaposition of risk and reward is what makes this space so fascinating to analyze.
It's like we're witnessing the birth of a new financial paradigm, and it's both exciting and daunting at the same time.
It's crucial to recognize the balance between innovation and security in DeFi. While the potential for high returns can be alluring, we must remain vigilant about the underlying risks.
Right, and with the recent incidents, it feels like the entire ecosystem is under a microscope. Investors are becoming increasingly cautious, which could slow down the rapid pace of innovation.
Exactly, and this scrutiny may lead to more robust standards. The protocols that can demonstrate transparency and resilience will likely attract more attention.
But it raises the question, how can investors differentiate between quality projects and those with vulnerabilities? There's a lot of noise out there.
A thorough understanding of governance mechanisms is key here. Projects that have a proven track record of managing risks effectively will stand out in this environment.
That makes sense. With governance being so central, how do you see community involvement evolving in response to these challenges?
Community involvement is likely to increase, especially as investors demand more accountability. Decentralized governance models that prioritize security will gain traction.
It's interesting to think about how these dynamics will shape user trust. If projects can engage their communities effectively, they might weather the storm better.
Certainly, trust is paramount in financial systems, and in DeFi, it can be fragile. Fostering a culture of accountability will be essential for long-term success.
Speaking of trust, how do you view the rising regulatory scrutiny? Is it a double-edged sword?
It is indeed a double-edged sword. Regulations can bring legitimacy and protection, but they can also stifle innovation if not crafted thoughtfully.
Exactly. And there's a fine line between protecting consumers and over-regulating the space. Finding that balance will be pivotal.
Moreover, proactive compliance can also differentiate projects in the crowded DeFi landscape. Those who embrace regulation may draw in more institutional investors.
That's a compelling point. Institutional money could really change the dynamics. But will these investors be comfortable in such a volatile space?
It's a valid concern. Institutions typically require more stability and security, which is why quality projects with strong frameworks will be more attractive.
And we must also consider how retail investors react to this cautious environment. Will they continue to engage with DeFi or retreat to traditional finance?
That's a crucial aspect to examine. Retail investors may be more skittish, often reacting to headlines and perceived risks rather than the underlying technology.
You're right. If there's a perception of instability, many might opt for safer options. That could have serious implications for DeFi's growth.
Indeed, we could see a bifurcation where only the most resilient projects thrive. The fallout may force the hands of weaker players to either improve or exit.
And that could ultimately lead to a healthier ecosystem. Fewer but more robust participants might be a better long-term scenario.
Absolutely, the survival of the fittest mentality can drive innovation toward more sustainable practices. It may be a painful process, but growth often comes through overcoming hurdles.
So, in this cautious phase, which sectors within DeFi do you see as having the highest potential for innovation and growth?
I believe lending and borrowing protocols will continue to evolve significantly. They hold a central role in DeFi, and improvements in risk assessment are likely.
That's a logical choice. They're foundational to the ecosystem. But how about liquidity pools? They seem to be facing increasing scrutiny.
Liquidity pools are indeed under pressure, especially regarding impermanent loss. However, innovations in automated market making could address these concerns.
Interesting. If projects can solve these issues, could liquidity pools regain favor? It's a risk-reward balance for investors.
Exactly. And if these projects can demonstrate consistent yield with lower risk, they may attract both retail and institutional investors.
That would be a turning point. But until then, education will be vital for investors. They need to understand the mechanics behind these products.
Yes, educational resources and community engagement can empower investors to make informed decisions, potentially minimizing panic during downturns.
A well-informed investor base can be crucial, especially as misinformation spreads rapidly in the crypto space.
Absolutely, and it's not just about being informed on the projects themselves, but also on broader market trends that can impact investments.
Indeed, awareness of macroeconomic factors is essential, as they can significantly influence sentiment in the DeFi market.
That's a pivotal insight. The intersection of traditional finance and DeFi is becoming more pronounced as market actors increasingly adopt digital assets.
Yes, we are witnessing a paradigm shift. As traditional finance reacts, it creates both opportunities and challenges for DeFi projects.
It's important to stay adaptable. Projects that can pivot in response to market conditions will have a better chance of thriving.
Flexibility is key. However, transparency will need to accompany those pivots. Investors can only support what they understand.
Well said. Transparency can build trust, especially if projects are open about their risk management strategies and decision-making processes.
And that trust can be a differentiator in a crowded space. Projects that prioritize clear communication may find themselves leading the pack.
Exactly. As the DeFi landscape evolves, those who establish a strong brand based on trust and transparency are likely to capture significant market share.
That sounds promising, but I wonder how many projects are genuinely committed to these principles. The temptation to cut corners can be high.
It's a valid concern, and that's where due diligence comes into play. Investors need to scrutinize project fundamentals before diving in.
Right, and understanding the team behind the project can also provide insights into their commitment to transparency and security.
Absolutely, a strong team with a proven track record can often be a good indicator of a project's potential longevity and resilience.
But even with strong teams, unexpected challenges can arise. Contingency planning is vital for navigating this volatile landscape.
Indeed, a proactive approach to risk management can be the difference between success and failure in this rapidly changing environment.
So do you think there's a need for more frameworks or standards in the DeFi space to help guide these emerging projects?
Definitely, standardizing frameworks could help set benchmarks for security and governance, making it easier for investors to assess risks.
That makes sense. If the industry can self-regulate to some extent, it may reduce the burden on external regulators.
Exactly, and it could foster a collaborative atmosphere among projects, where knowledge sharing leads to stronger overall standards.
And a cooperative environment could elevate the entire industry. After all, DeFi's success is interlinked. It thrives on interconnectedness.
True, the rising tide lifts all boats, so to speak. A more resilient DeFi ecosystem can only strengthen its legitimacy in the financial world.
As exciting as all this sounds, we must remember to remain cautious. Unforeseen events can shake the industry at any moment.
Absolutely, and adaptability is the key to navigating uncertainty. Those who remain agile will be more likely to find success amidst challenges.
We'll see how it all unfolds, but for now, staying informed and engaged with developments is crucial for anyone involved in DeFi.
Indeed, continuous learning will empower investors to make well-informed decisions in this dynamic landscape.
I look forward to seeing how the community responds. Their actions now could define the future trajectory of DeFi.
You know, Sabrina, one of the biggest lessons we've learned from past DeFi failures is the importance of robust audits. A lot of projects skimp on this critical step, thinking they can scale quickly without addressing potential vulnerabilities.
That's true, Chase. And with the rise of automated tools and smart contracts, the complexity increases, which often leads to oversight in security protocols. This is where the community needs to push for higher standards.
Exactly. Protocols that prioritize their security posture will likely weather these storms better than those that don't. Users need to be vigilant and prioritize platforms with clear security credentials.
And transparency plays a huge role in that, right? Investors should have access to the detailed security audit reports of any platform they're considering, so they can gauge the risk themselves.
Definitely, transparency builds trust. Many protocols have started publishing their audit results, which is a positive trend if we want to see broader adoption.
But even with transparency, there's the issue of governance structures, as you've mentioned before. Weak governance can lead to disastrous decisions, especially in turbulent times.
True, and governance tokens can sometimes skew power dynamics unfairly, leading to centralization in a space that promotes decentralization. It's a tricky balance.
And it raises the question of whether community-driven projects can truly prioritize the interests of all their users. What's your take on that?
Well, I think it requires ongoing dialogue among stakeholders. When everyone has a voice, it can lead to better decision-making, but it also demands responsibility and genuine engagement.
That's a fair observation. It's crucial for projects to foster inclusive communities that encourage participation in governance. But not every protocol is designed for that.
Right, and that's where we see the divergence in success between projects. Those that cultivate an active, informed community tend to perform better in the long term.
It's all interconnected, isn't it? User trust, governance, and security practices all combine to create a resilient ecosystem.
Absolutely. If one aspect falters, it can bring down the entire system. It's why the recent scrutiny from regulators could be a double-edged sword.
Yes, It's a delicate balancing act. On one hand, regulation could enforce better practices. On the other, it could stifle innovation by creating barriers to entry.
That's the conundrum. We need regulations that protect users without infringing on the decentralized nature of the tech. It's a tough needle to thread.
And how do you think the community will react if more stringent regulations come into play? Will they adapt or push back?
Historically, communities in DeFi have been quite resilient. If the regulations are reasonable, many will adapt and even thrive, but there will always be a faction resistant to what they perceive as overreach.
It's fascinating to witness the evolution of community response. Some groups rally for better compliance, while others continue to push for total decentralization.
Yes, and those opposing forces can lead to either fragmentation or innovation. It often depends on how the conversations unfold.
As conflicted as it sounds, that tension could actually drive forward-thinking solutions. It's the nature of a constantly evolving landscape.
Indeed, and let's not forget the role of education. The more investors understand the risks and innovations, the better equipped they'll be to navigate these waters.
Talking about education, what resources or platforms do you think are best for keeping up to date on DeFi trends?
There are quite a few. Following reputable crypto news outlets, engaging in community discussions on platforms like Discord, and utilizing educational sites that offer courses can be incredibly beneficial.
It's important to strike a balance between staying informed and not getting overwhelmed by the noise. Some platforms certainly help with that.
Absolutely. Filtered, concise information is key. Also, leveraging tools that aggregate data and insights can help investors cut through the clutter.
That's where community-driven platforms shine, right? They can provide real-time insights based on peer experiences and collective knowledge.
Exactly. Crowd wisdom can be profound in this space. Discussion forums and social media channels are often where you find the most nuanced insights.
But, of course, one must approach those insights cautiously. Misinformation can spread quickly if not properly vetted.
Well said. It's essential for investors to develop critical thinking skills and question the sources of their information.
It's a learning curve, like everything in crypto. Those who embrace this learning will be the ones who succeed in the long run.
Exactly. Each challenge presents an opportunity for growth and innovation. The DeFi landscape is still in its infancy.
And regardless of the hurdles, there's always potential for groundbreaking developments. That's what keeps the community vibrant.
For sure, every challenge in DeFi is also a chance to rethink solutions. The innovators who see it that way will carve out the future.
And speaking of innovation, what recent advancements have stood out to you in the DeFi space?
I've been really impressed by the growth of decentralized insurance protocols. They address a critical gap by providing risk coverage that's often overlooked.
Insurance in DeFi is a fascinating topic. It's like creating security nets for the ecosystem, which adds another layer of trust.
Exactly. Plus, it incentivizes more users to engage with protocols they might find too risky otherwise.
And it broadens the appeal of DeFi to those who may have been hesitant due to security concerns.
Precisely. When users feel protected, they're more likely to explore the full potential of what DeFi has to offer.
I think the future will show an increasing number of these insurance solutions as a response to the current market's risk concerns.
Absolutely, and that's where the market will evolve. Think tank collaborations between developers and risk managers could yield groundbreaking innovations.
The synergy between diverse professionals is crucial. We need to think cross-disciplinarily to address all the nuances of risk.
Well said. The future of DeFi requires a multifaceted approach that combines financial acumen, technical know-how, and regulatory insight.
And that interplay will inform how future innovations are crafted. The adaptability of teams will be a significant determinant of success.
Exactly. Those who can pivot and respond to external pressures are likely to emerge as leaders in the next phase of DeFi.
It's an exciting time, albeit a cautious one. Still, the potential for disruptive change is palpable in the air.
Indeed. As we move forward, it's critical to keep our ear to the ground and stay engaged with the pulse of the community.
Absolutely, Chase. Keeping a close watch on both the technological advancements and the regulatory developments will be essential for navigating the future of DeFi.
Well put, Sabrina. The interplay of innovation and regulation will shape how we define and understand DeFi in the coming years.
And as we continue to monitor this landscape, we must remain vigilant against complacency. The stakes are too high for passive engagement.
Absolutely. Continuous engagement will be key for anyone wishing to thrive in this ever-evolving ecosystem.
I look forward to diving deeper into these developments with you in future episodes, Chase. There's so much to unpack.
Me too, Sabrina. The journey ahead is filled with possibilities, and I'm excited to explore them together with our listeners. It's interesting how security concerns are shaping the narrative around DeFi at this moment. Many users are starting to prioritize safety over the potential for high returns.
Exactly, Chase. This shift in focus could lead to a more mature market, but it also creates challenges for projects that rely heavily on high-risk strategies.
I believe we will see a rise in projects that emphasize transparency and robust security measures to regain user confidence. This is crucial for the health of the entire DeFi ecosystem.
True. And as we see increased regulatory scrutiny, innovative projects will need to adapt without losing their edge. Balancing compliance and innovation will be a tightrope walk.
Right, and the potential for regulatory hurdles might drive smaller projects to rethink their strategies. It's a delicate balance between staying innovative and remaining compliant.
Moreover, governance weaknesses often expose protocols to serious risks. Decentralized governance needs to evolve to ensure that projects can adapt quickly to the changing landscape.
Absolutely, there are already discussions around how to implement more effective governance frameworks, especially in the face of rising exploit volumes.
Plus, those governance structures must be designed to prevent the dominance of a few large holders. Otherwise, we could see centralization creeping back into DeFi.
That's a valid point. We should keep an eye on protocols that are exploring novel governance models that encourage wider participation and reduce central risk.
And let's not forget about community education. Enhancing users' understanding of risks is crucial in this cautious phase.
Indeed, educated users are less likely to fall victim to scams and hacks, which ultimately contributes to a healthier ecosystem.
I think the recent incidents have already sparked a conversation on risk management practices among DeFi enthusiasts.
Yes, and we've seen some projects pivot their marketing towards risk mitigation rather than just flashy returns. It's a sign of the times.
Exactly. And as the market becomes more discerning, we may see a rise in funding for projects focusing on security and auditing.
Security audits have always been important, but now they're almost a must-have for gaining user trust. A solid audit can validate the project's integrity.
This evolution might also push platforms to adopt insurance mechanisms against exploits. It could add an additional layer of safety for investors.
That's a fascinating idea. Having insurance in place could significantly bolster user confidence. It's something that might attract a more traditional investor base.
And yet, the insurance models themselves need to be robust to withstand the peculiar risks inherent in DeFi. Not all insurance products are created equal.
True, and as the landscape matures, we'll see differentiation among insurance offerings, with some becoming more sophisticated than others.
Moreover, the tools for risk assessment are becoming increasingly sophisticated too. Data analytics will play a key role in informing investor decisions.
Absolutely. By harnessing data analytics, users can make more informed decisions and potentially identify high-risk investments before they become problematic.
This data-driven approach could also empower smaller investors who previously felt overwhelmed by the complexities of the market.
Yes, and with the right tools, they can navigate the space more confidently. It's an exciting time for user empowerment in DeFi.
But as we empower users, we must also highlight the importance of thorough research. Relying solely on tools without understanding the fundamentals could be dangerous.
Definitely. Users must strike a balance between utilizing tools and cultivating their own understanding of the projects they're investing in.
And the responsibility also lies with the projects themselves to provide clear, thorough information and not just hype.
Exactly. Transparency can make all the difference. Trust is built through consistent, honest communication from projects.
It's also about setting realistic expectations. Many investors come in with the mentality of getting rich quick, which can lead to rash decisions.
That's a common trap. Promoting a culture of long-term thinking could benefit the whole ecosystem and lead to less volatility.
Agreed. If we can shift the narrative from quick gains to sustainable growth, it may foster a more resilient market.
That's the crux of it. Resilience in the DeFi space will be paramount for its survival and future growth.
As we've discussed, innovation can't happen in a vacuum. It must adapt within a framework that values both creativity and security.
Well said, Sabrina. And as we push for innovation, we must ensure these advancements don't compromise the core principles of decentralization.
Indeed, it's a delicate balance, and we'll have to scrutinize how various projects approach this as they scale.
Moreover, the DeFi space is interconnected. What happens with one protocol can trigger effects across the entire ecosystem.
That interconnectedness amplifies risks, making it even more critical for projects to collaborate on security practices.
Collaboration could be a key factor in addressing shared vulnerabilities. A unified front will be essential for restoring confidence.
Absolutely. DeFi protocols must work together to create an ecosystem where risks are minimized and benefits are maximized.
And with initiatives like decentralized insurance models and security auditing, there's hope for a more balanced approach moving forward.
We might see a wave of innovation in risk management tools designed specifically for DeFi, catering to both users and developers.
That would be a welcome trend. Projects that prioritize user safety and education will likely emerge as leaders in the space.
And as we know, educating users is also an ongoing process. Continuous learning will help everyone keep pace with rapid changes.
Exactly, and community engagement will play a vital role in this education. The more informed the community, the more resilient the ecosystem.
It's almost like nurturing a garden. You have to continually tend to it for it to flourish, particularly in such changing conditions.
Well put, and this gardening approach can help instill a culture of responsibility among users, motivating them to actively participate.
This active participation can also translate into more robust feedback loops for projects, allowing them to iterate rapidly on their offerings.
And listening to community feedback is critical for a DeFi project's success. It can lead to an agile development process.
This cycle of feedback and adaptation is what will ultimately define the next chapter of DeFi performance.
And we can only hope that this leads to a marketplace that is not only innovative, but also secure and user-friendly.
In the end, the evolution of DeFi will hinge on how well it can integrate safety measures, while still pushing the envelope of what's possible.
Well, Sabrina, I believe we're on the cusp of a new wave of DeFi innovation driven by these very discussions.
Absolutely, Chase. It's exciting to think about how these conversations will shape the landscape in real time.
I look forward to unpacking these developments and the implications they have for the crypto community. It's an evolving story.
Me too, Chase. And for our listeners out there, we hope this discussion sparks further conversations and insights within your communities.
Indeed, remember, staying informed is your best defense in navigating the DeFi space.
And as always, we encourage our listeners to reach out with questions or topics they'd like us to explore in future episodes.
We appreciate your engagement and look forward to bringing you the latest insights from the ever-evolving world of DeFi.
Thanks for tuning in, everyone. Until next time, stay curious and crypto-informed.
It's interesting to see how many developers are still pushing forward with innovative solutions in DeFi, despite the risks. You know, some projects are addressing these governance weaknesses directly by implementing more robust frameworks.
Right. And this is where transparency becomes critical. Projects that offer clear documentation and audits are likely to gain the trust of users who are naturally more cautious now.
Exactly, Sabrina. Trust is everything in this space, and those who can provide proof of security protocols are likely to stand out. It's also noteworthy how the increased scrutiny from regulators could lead to a more mature ecosystem.
Definitely, Chase. However, some argue that excessive regulation might stifle innovation. Finding that balance between protection and growth is going to be key for the future of DeFi.
That's a valid point. The challenge will be fostering an environment that allows for experimentation while ensuring user safety is prioritized. This is especially important given the recent uptick in exploit volumes.
Speaking of exploits, have you noticed how certain projects have been targeted specifically? It often feels like low-hanging fruit for attackers who exploit governance weaknesses.
Absolutely. Attackers tend to focus on projects with less robust governance mechanisms as they are easier to manipulate. It really highlights the need for decentralized governance models that are effective and resilient.
True, and some protocols are exploring novel governance features like quadratic voting to enhance representation and decision-making. But will these be enough to deter attackers?
That's the million-dollar question, isn't it? Implementing these features must go hand in hand with robust security audits and community engagement to ensure they're effective.
And as we've seen, community involvement can create a stronger defense against attacks. When users feel invested, they're more likely to actively monitor and report suspicious activities.
Community vigilance is indeed a powerful tool, but it can't be the only line of defense. Projects need to incorporate multi-layered security strategies to protect their users.
Speaking of multi-layered strategies, what are your thoughts on insurance protocols emerging in the DeFi space? They seem to offer an additional layer of security for investors.
Insurance protocols are fascinating, but they also have their own risks. The challenge lies in ensuring that the insurance contracts are backed by sound financial models and are not exposed to the same vulnerabilities as the underlying assets.
That's a great perspective. It could create a false sense of security if users think they are fully protected without understanding the limitations of these insurance products.
Exactly, Sabrina. Education is vital to ensure that users understand what they are buying into and that insurance products are not a panacea for all risks in DeFi.
And what about the rising regulatory scrutiny? Do you believe it will ultimately benefit the sector by weeding out poorly designed projects?
In the long run, yes, but in the short term, it might create uncertainty. Some projects may struggle to adapt to regulatory frameworks, leading to a temporary consolidation in the market.
That's a crucial point. A shakeout could lead to more reliable players emerging, which might reassure both users and institutional investors.
Indeed, and as larger institutions begin to participate, they will demand higher standards for security and transparency, which might help elevate the entire ecosystem.
Absolutely, but we must also consider the potential for regulatory overreach. If regulators impose too strict a framework, it could push innovation and projects offshore.
That's a danger we must keep an eye on. The decentralized nature of DeFi means that innovation could thrive in jurisdictions with more favorable regulations.
And that could create a fragmented market where users are left navigating a patchwork of regulations, which might counteract the very principles of DeFi.
Precisely, and that's why the dialogue between regulators and the DeFi community is so important. Constructive engagement could lead to a framework that protects users without stifling innovation.
So when it comes to investing in DeFi right now, caution seems to be the prevailing attitude. What are your thoughts on what strategies users should adopt?
Investors should be looking for projects that emphasize transparency, robust security, and a strong community. Diversifying their exposure while maintaining a close eye on market trends is crucial.
And perhaps focusing more on established protocols rather than chasing after the latest hype can provide a sense of stability amid the ongoing volatility.
That's always a sound strategy. However, it doesn't mean one should completely disregard emerging projects. Due diligence is key to striking that balance.
Could you elaborate on what good due diligence looks like in this context? It seems to be a lost art for many.
Of course, good due diligence involves evaluating a project's white paper, understanding its technology, and checking for audits. Investors should also assess the team behind the project and their track record.
That makes a lot of sense. Maybe we can encourage our listeners to develop a checklist that they can use to evaluate projects before diving in.
Great idea. A checklist could help demystify the process and give them a clearer path to assessing the various factors at play.
And it can also serve as a reminder that investing in DeFi isn't just about the potential high returns, but also about understanding the associated risks.
Absolutely. The appeal of high yields is alluring, but sustainability is the name of the game in the long run. High returns often come with high risks.
So true. It's important for investors to align their risk tolerance with their investment choices in the DeFi space.
Exactly, and that's why continuous education is critical. The landscape is ever evolving, and knowledge is a powerful tool for mitigating risks.
And speaking of education, podcasts like ours can play a role in sharing insights and sparking conversations. Don't you think?
Absolutely, Sabrina. We're here to bridge the knowledge gap and provide listeners with the tools they need to navigate this complex environment.
Our role as educators is essential, especially as the DeFi landscape continues to grow and change.
I couldn't agree more. Staying ahead of trends and understanding the risks allows investors to make informed decisions.
And that, in turn, can contribute to a healthier, more sustainable DeFi ecosystem.
Absolutely. A well-informed community is more likely to support high-quality projects and hold them accountable.
And that accountability can lead to better practices and, ultimately, a more robust market.
In essence, informed investors can help shape the future of DeFi and push for the changes that benefit everyone.
It's a collective effort, and each person's awareness and actions can ripple through the entire ecosystem.
Well said. As we wrap up, I hope our listeners carry these insights into their DeFi journeys.
Absolutely. Remember, whether you're a seasoned investor or just starting, always prioritize knowledge and risk management.
And with that, stay curious, stay informed, and be safe in the DeFi space.
Thank you for joining us in this deep dive today. We hope to see you back for our next episode.
So let's talk about the recent movement in Dogecoin. It's been quite a roller coaster ride, hasn't it?
Absolutely. The session saw a swing of about 7%. That's no small feat, especially considering the macro jitters circling around.
Right, and it's interesting how that came on the back of those tariff-led sell-offs we've been hearing about.
Exactly. The market always seems to react to these broader economic concerns. It almost feels like a knee-jerk reaction sometimes.
Yeah, you're probably right, but you have to wonder how much of that reaction is genuine concern versus just market participants trying to lock in profits.
Definitely, the reports of whale liquidations totaling over $74 million add an intriguing layer to all this.
That's interesting. Large liquidations can signal either significant panic or an opportunity for those buying the dip.
Right, and we know whales play a significant role in the Dogecoin market. Their movements can really set the tone.
And speaking of tone, the support level that Dogecoin has found is worth examining further. It always helps to know where the community stands.
For sure. Support levels can indicate where the market sentiment is shifting. It's not just about the price, but the psychology behind the trading.
Exactly. And since Dogecoin is community-driven, those support levels can be influenced by social media trends as much as market fundamentals.
You know what? If the community remains active and engaged, it can help stabilize prices.
Oh, and another aspect to consider is the upcoming catalyst that could influence the market further.
Absolutely. Market participants are always looking for that next big event or announcement that could shift sentiment.
I think the anticipation around potential regulatory news could be a significant factor.
That's a great point. The regulatory landscape is changing, and how those regulations unfold could impact trading dynamics drastically.
Let me think about this for a second. If the regulations are favorable, we might see an influx of new investors.
Yes, and if they're restrictive, it could lead to further sell-offs. The uncertainty is palpable.
Yeah, in times like this, it's crucial to stay informed and analyze how these factors interact.
Well, I think what we're seeing here isn't just a simple price fluctuation, but a complex interplay of factors.
Exactly. And I think it's essential to look at the technical indicators alongside these macroeconomic factors as well.
For sure, technical analysis can provide insights on where Dogecoin might head next, especially after such volatility.
Right, and when you combine that with macro signals, you start to form a more comprehensive view of the market.
And don't forget the emotional aspect of trading. Fear and greed are powerful motivators in this space.
Oh, absolutely. You can feel the market's pulse through social media and news, which can sometimes lead to irrational behavior.
Yeah, it's a tough balancing act between being rational and getting swept up in the hype.
Well, I think one of the key takeaways here is that understanding these emotional undercurrents can give traders an edge.
Right, it's about more than just charts. It's about gauging sentiment and predicting reactions.
And as we continue to navigate this landscape, keeping a pulse on both fundamental and technical aspects will be vital.
Exactly. And we should also keep an eye on how these developments affect the broader crypto ecosystem.
That's true. Dogecoin being so closely tied to community sentiment may influence other altcoins.
That's right. Other cryptocurrencies often rally when Dogecoin shows strength, or vice versa.
Yeah, the interconnectedness of this market can be both a strength and a weakness.
Agreed, it makes it essential to monitor not just Dogecoin, but other coins that might react to changes in sentiment.
Well, I think it's safe to say that volatility in a meme-based currency like Dogecoin is to be expected.
Definitely. And for traders, this provides both risk and opportunity, depending on how they manage their positions.
Right, and those who are patient and do their due diligence might find themselves in a favorable situation.
For sure. But it also emphasizes the need for solid risk management strategies in a volatile market.
Absolutely. Setting stop losses or taking profits at strategic points could be beneficial.
You know, it all boils down to the trader's mindset and discipline.
Exactly. Maintaining a cool head during these tumultuous times is crucial.
So with all that said, where do you think Dogecoin is headed next?
So let's talk about XRP and its recent movement. It's interesting to see how it has stabilized after an early dip.
Absolutely, Chase. It really caught my attention when I noticed that it briefly dipped before finding support again.
I think the way XRP behaves can often be a bellwether for overall market sentiment. When it dips this way, it raises questions.
Right, and with the trade tensions adding to the volatility, it makes sense that traders are cautious.
Yeah, The renewed fears regarding US-China tariffs really complicate the landscape for cryptocurrencies.
It's a classic example of how external factors can influence crypto markets. I mean, the connection isn't always obvious, but it's there.
Exactly, and then you have the SEC deadlines approaching regarding spot XRP ETFs, which adds another layer of uncertainty.
Those deadlines are crucial. Traders are likely positioning themselves beforehand, trying to anticipate potential outcomes.
Yeah, and that anticipation can lead to fluctuations in price. People are really trying to gauge how it might pan out.
Right. It's like setting up for a game of chess. Everyone is waiting for the right moment to make their move.
Well, I've noticed traders seem to have their eyes on the $2.40 level specifically for a breakout.
That's definitely a significant level. Hitting that would signify a major shift in sentiment.
Yes, and it could potentially lead to a rally if momentum builds from that breakout.
On the flip side, if it fails to break above that level, it could signal more bearish trends, don't you think?
Absolutely, and traders know that, so they must be weighing their options carefully.
Indeed, the fear of missing out can really mess with rational trading strategies.
Right, and that brings us back to the broader market context. It's so volatile right now.
And with these external influences, it can be hard to predict where XRP will go next.
Let's see how this plays out in the coming days. I think we might see increased trading volumes leading up to those SEC deadlines.
Absolutely. It's going to be a critical period for many assets, not just XRP.
Now, shifting back, what impact do you think the tariff fears will have on other cryptocurrencies?
Well, these fears can lead to general risk-off sentiment. Investors might pull back from high-risk assets.
That's a good point. When people feel uncertain, they often retreat to safer assets or stablecoins.
Exactly. And that could mean less liquidity in the market, which would amplify any volatility.
And remember, liquidity is often what keeps things stable during turbulent times.
Yes, without it, we could see more drastic price movements for cryptocurrencies.
So if XRP breaks above $2.40, it could attract those sidelined investors back into the market.
And conversely, if it fails to break that level, those same investors might decide to step back.
I think that's a very real scenario. The emotional aspect of trading can really dictate market movements.
Emotions in trading are often the wild card. It's fascinating, isn't it?
Yeah, the human psyche really plays a significant role here.
It does, and just as we've seen with past events, market reactions can be unpredictable.
So to tie this back to XRP, its stabilization is critical. It's a barometer for how traders are feeling.
That's right. The very fact that it stabilized shows resilience, despite external pressures.
I'm curious to see how this will evolve as we near those deadlines and the broader market reacts.
Yeah, well, let's keep watching those trading volumes closely. They'll tell us a lot.
Absolutely, and the sentiment from social media and news outlets will also play a role.
Right. Engaging with those narratives can help us decipher what traders might be thinking.
And it's all interconnected. The crypto market breathes with a life of its own.
Indeed, it does, and it's constantly changing. That's both the challenge and the excitement.
I think that about wraps up our discussion on XRP for now. What do you think?
Yes, I think we've covered a lot of ground.
Now, let's move on to the next topic, which involves some interesting developments regarding another significant player in the market.
But wait, there's more. It's quite a fascinating twist and worth diving into.
Let's do it. I'm eager to see how this next story unfolds.
I'm excited too. Stay tuned, everyone.
So let's talk about this bizarre trend that's been making waves lately. It seems like the world of online pranks has taken a wild turn with AI-generated photos.
Absolutely, Chase. The viral prank we're discussing today involves AI images depicting what looks to be a homeless man inside people's homes. It's raised quite a few eyebrows.
Right, and the reactions to this have been mixed, to say the least. I mean, just imagine going about your day and then seeing such an unsettling image pop up.
Yeah, it's unsettling indeed. Reports have indicated that some people have actually called 911, thinking it was a real situation.
It's shocking, honestly. People are genuinely panicking over these pranks. The emotional toll on individuals is significant.
Right, and it's raised so many ethical questions about the use of AI in creating such images. It's funny in a dark way, but at what cost?
You know, it seems like we've crossed a line. I appreciate humor, but when it causes real fear and stress, it becomes problematic.
Indeed, and it's not just individuals who are upset. there are police warnings against these pranks due to the potential for unnecessary emergencies.
Exactly. Law enforcement has to allocate resources to respond to these calls when they could be focused on real emergencies.
And think about how many people are affected. Families, neighbors, the ones who witness these fake scenarios. It's almost like adding anxiety to an already stressful world.
It's true. Society is already wrestling with many issues, especially related to mental health. Do we really need to intensify the anxiety through such pranks?
It might be entertaining for some, but for many others, it's just another layer of fear. We often underestimate the impact of visuals,
And the fact that these images are generated by AI adds another layer of complexity. Don't you think? There's something inherently unsettling about technology creating false realities.
Absolutely, Chase. The technology is supposed to enhance our lives, but in this instance, it's being weaponized to create chaos. That's a misuse of AI, for sure.
Right, but let's consider the flip side too. Perhaps it acts as a wake-up call for people to think critically about what they see online.
That's a valid point. Critical thinking has never been more essential, especially with the prevalence of misinformation.
Exactly. We need to be aware that not everything we see is real, but it's tricky because the emotional response can cloud judgment.
And there's no shortage of shocking content online. This prank might just be the tip of the iceberg when it comes to AI-generated fear.
Isn't that the truth? It could easily spiral into something worse if we're not careful.
Yeah, and it opens up a discussion about regulations surrounding AI usage in media. Should there be limits on what can be created?
That's interesting. Striking a balance between creative expression and ethical boundaries is definitely a challenge.
Exactly. There's a fine line between humor and harmful consequences.
Well, I think the platform that hosts this content has a responsibility too. They need to enact measures to prevent such pranks.
That's a crucial point. Platforms can play a significant role in moderating content and promoting ethical standards.
Right, and it might also lead to education around AI technology, helping people understand how to navigate this new reality.
And education is key, especially as AI continues to evolve. We need to prepare society for the challenges ahead.
Yeah, it's a lot to consider. As technology transforms, so do our societal norms and expectations.
Without a doubt, and as we wrap up this segment, I'm curious to see how people will respond moving forward.
Well, let's keep our fingers crossed for more responsible use of tech in the future. The last thing we need is more panic.
I agree. Let's hope for a shift towards positivity in technology, rather than fear. But it's a wait-and-see game for sure.
Yeah, and hopefully these pranks can serve as a lesson rather than a trend.
Well, I think we've covered the main aspects thoroughly. Shall we move on to our next topic?
Absolutely, let's shift gears a bit and focus on something more uplifting.
Great idea. Now, on to our next news story.
So, the crypto landscape is rapidly evolving, isn't it? It feels like we see new stories breaking every day.
Definitely. And it's important to stay informed in this space. There's always something new around the corner.
And the implications are huge, not just for investors, but for the entire ecosystem. Issues like security, regulation, and technology are at the forefront.
True, and what we're witnessing right now is the intersection of these aspects, which makes this conversation all the more intriguing.
Let's dive deeper into this and unpack the various layers present in the next story. Now, here's something interesting about the ongoing developments in the crypto space. Stripe has just made a substantial move in the blockchain arena.
Indeed, Chase, their Tempo blockchain has raised a staggering $500 million, which is turning heads and sparking a lot of conversation.
Absolutely, and what particularly noteworthy is the hiring of Dankrad Feist, a prominent developer from the Ethereum Foundation. That's a big win for Stripe.
Yes, it really is. Feist's expertise could significantly influence the development of Stripe's blockchain initiatives.
The valuation of $5 billion for Tempo also raises a lot of eyebrows. It's impressive, but indicates a lot of confidence in their vision moving forward.
Right, and this move signals their determination to gain a foothold in the blockchain ecosystem. It makes me wonder about their ultimate goals and strategies.
Well, Stripe has always been about simplifying payment processing. Integrating blockchain could potentially streamline transactions and reduce costs.
Exactly, and with the ongoing shifts in digital finance, having a robust blockchain infrastructure could provide them with a competitive edge.
I think one of the more intriguing aspects is how this might affect the broader crypto landscape. Other companies might feel pressured to innovate or scale up rapidly.
Competition in this sector is fierce. Companies like PayPal and Square are also making strides in the blockchain space.
Right, and the entry of a well-funded and experienced player like Stripe could accelerate the pace of innovation across the board.
It's interesting to see how these traditional financial institutions are adapting to the inevitable shift towards decentralization.
Indeed, and I think Feist's role will be pivotal. His experience in the Ethereum ecosystem could help navigate some of the complexities that arise.
Oh, and another thing that stands out, his previous projects and affiliations could also attract other talented developers to Stripe.
That's a smart point. Having a well-regarded leader like Feist can indeed serve as a magnet for talent in the blockchain space.
And let's not forget the importance of community support. The Ethereum community is quite passionate and engaged.
Yeah, you're probably right. If Feist can leverage those connections, it could open numerous doors for Stripe.
I think it's crucial for them to build a community around Tempo, especially considering how decentralized technologies thrive in collaborative spaces.
Well, I think what we're seeing here is actually a merging of traditional finance with innovative blockchain solutions, which could facilitate broader acceptance.
Exactly. And increased acceptance means greater mainstream adoption. It's a win-win scenario for everyone involved.
Right, and with the backing of a gigantic payment processor like Stripe, we're likely to see more clarity and acceptance in regulatory frameworks.
That could smooth the path for other companies looking to implement blockchain technologies within their operations.
Let me think about this for a second. If Stripe successfully executes this vision, it could pave the way for a wave of similar initiatives.
Oh, absolutely. Other companies will want to follow suit, especially if they see tangible benefits from Stripe's approach.
And speaking of benefits, the integration of blockchain could help with issues like fraud detection and transaction traceability.
That's an excellent point, Chase. The transparency that blockchain offers could really enhance trust between consumers and businesses.
Well, I think what we're seeing is a shift towards a more secure financial environment, which is something we can all appreciate.
Indeed. And with Stripe's resources and expertise, this could transform how we think about online transactions.
Let's also consider the global implications. Stripe has a solid international presence, which could aid in the adoption of blockchain technology worldwide.
Oh, that's a valid point. The global aspect could expedite the integration of blockchain in various markets that are still hesitant.
You know what? It seems like the tech industry is at a pivotal moment where the lines between traditional finance and blockchain are becoming increasingly blurred.
And it's exciting to think about all the possibilities this could unlock across different sectors.
Right, and the speed of innovation is something we haven't really seen before. I mean, Stripe could set new benchmarks for performance in blockchain.
Given the potential that this holds, I wonder how long until we start seeing widespread applications of their technology.
Exactly. If they roll out effective solutions within a reasonable time frame, it could change the narrative around blockchain software development.
Oh, and it also puts pressure on other blockchain projects to produce results. Timing could be everything.
Yeah, you're right about that. The crypto market rewards innovation and performance on a timeline.
It's almost like a race to see who can deliver the most impactful technology first.
I think it's an exciting time for the industry, and we should keep a close eye on how Stripe's tempo evolves.
Absolutely. I can't wait to see how their new blockchain impacts existing players and the market dynamics.
And with Feist's background, it's hard not to be optimistic about the potential innovations we might witness.
Well, I think we've covered a lot of ground on this topic. Any final thoughts before we shift gears?
I'd just say that the next few months will be crucial to watch. It'll show whether they can execute as expected.
Indeed, and their execution will likely serve as a case study for others in the industry.
Well, let's keep our listeners updated on any developments as they come. For now, what's next on our agenda? So let's talk about a fascinating development in the crypto space, Sabrina. Mr. Beast, the YouTube sensation, has filed a trademark for a crypto exchange and payments service.
Yes, that's quite the news. Mr. Beast is known for his creative content and philanthropy, but entering the crypto world is a significant shift for him.
It really is. The plan is to launch Mr. Beast Financial, but as exciting as that sounds, there are numerous regulatory hurdles he'll need to navigate.
Regulatory hurdles are a huge deal, especially in the crypto industry. We've seen many projects falter due to not meeting regulatory standards.
Exactly, and Mr. Beast's fame could attract a lot of attention, both positive and negative. It raises questions about how solid his foundation in compliance will be.
I wonder how he plans to approach these regulations. Is he partnering with existing financial institutions, or is he aiming to build from the ground up?
That's a good question. I'd bet he'll need some seasoned experts to help navigate the complex landscape of financial laws. It can be a massive undertaking.
Right, and the regulatory environment is constantly changing. Just look at how different countries are treating cryptocurrencies. It's a minefield.
True, some regions are welcoming crypto with open arms, while others are taking a much stricter stance. I think he'll need to have a global strategy in place.
Yeah, the global nature of crypto makes compliance even more challenging. Each jurisdiction has its own set of rules.
It's a balancing act for sure, and the last thing he probably wants is to launch his brand only to face legal challenges right out of the gate.
Absolutely, it could severely damage his reputation and that of his brand if things go sideways. There are stakes involved here.
On the flip side, if he manages to navigate through these hurdles successfully, the potential for success is enormous, especially given his audience.
Indeed, his following could easily drive a huge user base and create an exciting, vibrant community around MrBeast Financial.
That's what's so intriguing here. The intersection of crypto and influencer culture is relatively unexplored territory.
And he has a built-in audience that trusts him, which is rare. If he can present a service that's safe, fun, and user-friendly, it could thrive.
Right, and he tends to create engaging content to explain complex concepts that could translate well into educating potential users about crypto.
Exactly. He could simplify the onboarding process for new users, a significant barrier for many who find crypto intimidating.
However, he might need to consider the volatility of cryptocurrencies. How will he communicate the risks involved?
That's crucial. Transparency will be key. He needs to clearly outline the potential highs and lows of investing in a crypto platform.
Well, I think addressing risks head-on could also earn him credibility. People appreciate candor, especially with something as unpredictable as crypto.
Totally. And it could help to educate users and mitigate backlash if things don't go as planned. That kind of transparency can go a long way.
Speaking of backlash, can you imagine the scrutiny he'll face? Being in the public eye means every misstep will be amplified.
Yes, and that adds pressure. He has to be prepared for the potential challenges that come with such a public endeavor.
Well, I think it's also a great opportunity to showcase the positive impact that crypto can have when applied thoughtfully.
That's true. If he can leverage his influence to promote responsible investing, it could shift some perceptions about crypto.
That's the hope, isn't it? Crypto still has a reputation problem to tackle.
For sure. So, with all of this in mind, what do you think are the next steps for MrBeast in this venture?
Well, I think he'll need to assemble a solid team, especially legal and compliance experts first and foremost. That's critical.
And I suppose testing the waters with a small user base initially could be beneficial to gather feedback before a full launch.
Exactly. A beta phase could help iron out any issues, allowing them to refine the platform based on real user experience.
That makes a lot of sense. Collecting data on user engagement and functionality can only strengthen the final product.
So many layers to consider. I can't wait to see how this unfolds.
Me too. This could be a landmark moment for both MrBeast and the wider crypto landscape.
All right, let's move into an analysis of what this might mean for the broader crypto ecosystem and influencer dynamics.
Absolutely. MrBeast's entry could signal a shift in how influencers engage with financial technologies.
That's an interesting perspective. His success could encourage other influencers to explore similar ventures.
Definitely. If MrBeast succeeds, we may see a wave of influencer-led projects popping up across the crypto space.
Right, and these influencers often have built-in communities that are ready and willing to engage, which is a huge advantage.
Exactly. Established trust can lead to a faster adoption rate, ideally paving the way for a more mainstream acceptance of cryptocurrencies.
That could be a double-edged sword, though. If things go wrong, it could lead to disillusionment within those communities.
Yes, and that's something we can't overlook. The stakes are high, not just for MrBeast, but for the larger crypto community.
Well, I think it's essential for influencers to approach such responsibilities with caution and an understanding of the risks.
Totally agree. They should prioritize education and not just hype to ensure their audiences are well informed.
That's a healthy approach. Educating users can foster a more informed community, which is vital for sustainable growth.
And it's something that the crypto world desperately needs. More education and less speculation.
Definitely. In the long run, an educated community will help shape the market positively.
Right. And an educated user base can also help dispel some of the misconceptions associated with crypto investing.
That's valuable. Reducing confusion can lead to increased confidence, which is critical during volatile times.
Oh, and another thing that stands out is how Mr. Beast's brand aligns with social causes. This could lead to unique integrations in the crypto space.
Exactly. He could explore charity options like donating a portion of transaction fees to various causes, appealing to his philanthropic side.
That would be a fascinating angle. Crypto for a cause could bring a lot of goodwill and attention.
Well, I think it could also set a precedent for how future crypto projects might incorporate social responsibility.
Totally. It could be a win-win, enhancing brand reputation while contributing positively to society.
And it could spark conversations about the role of cryptocurrencies in charitable giving.
That's an important topic to discuss, especially given the increasing interest in impact investing.
The potential is enormous when you think about it.
Yes, the dialogue around crypto is evolving, and Mr. Beast could play a significant role in that shift.
Well, let's not forget the technological aspects. A user-friendly platform can help demystify the crypto experience.
Absolutely. A seamless interface is crucial. If it's convenient to use, people will be more likely to engage.
And if Mr. Beast can marry usability with a strong educational component, he could help foster a knowledgeable user base.
That's the goal, isn't it? To instill confidence and empower users instead of leaving them in the dark.
Exactly. The industry needs more leaders who prioritize user engagement and education over short-term gain.
I think that's something we both agree on. With suitable values, it could bring a new wave of responsibility to crypto.
Right. The more influencers like Mr. Beast can engage meaningfully in the space, the brighter the future for crypto could look.
Well, I think we've unpacked a lot here. It'll be interesting to see how this all unfolds.
Absolutely. I'm curious to see how the regulatory landscape reacts to Mr. Beast's ambitions, as it could influence future influencers entering the space.
Yes, and the policies enacted now could shape the ecosystem for years to come.
Well, I think we've covered this topic extensively. Let's focus on our audience next.
For sure, engaging with our listeners about the potential impact of Mr. Beast Financial will be essential.
Definitely. We want to hear their thoughts and insights on this developing story.
Exactly. What are their hopes or concerns for influencer-driven crypto projects?
And how do they envision the future of crypto and finance intertwining?
Audience feedback can provide us with a broader perspective as we dive deeper into similar negotiations.
So let's encourage our listeners to share their opinions on social media. We want to hear from everyone.
Absolutely. Their insight could contribute to ongoing discussions and shape the narrative.
I think inviting the audience into the conversation enriches it for everyone.
Definitely, and we can also dive into some of those comments and questions in our next episode.
Right. Engaging content can only be created through open dialogue with our community.
I look forward to hearing different viewpoints and how they resonate with the themes we've discussed.
Well, let's keep that momentum. It's vital to stay connected with our audience as this landscape evolves.
All right, with that, let's wrap this section up and transition to our next topic.
But wait, there's more. We have some exciting updates on another groundbreaking crypto initiative.
That's right. We're moving on to an important development that could reshape how we view blockchain technology.
So let's talk about the recent movement in the crypto markets. Bitcoin, Ethereum, and XRP have all taken a noticeable downturn lately.
Absolutely, Chase. It's interesting how this aligns with some traders reflecting on the 4-year Bitcoin cycle. There seems to be a lot of sentiment weighing down the crypto space.
Right, and the fact that retail traders still refer to that cycle is fascinating. They seem to believe that historical patterns will repeat.
You know what, Chase? That can be both a blessing and a curse. When traders cling to those cycles, it can create self-fulfilling prophecies, but it can also lead to panic selling.
Exactly. You can see it in the charts. A real sell-off has hit the markets as traders react to those perceived cycles.
And it's not just the technical aspect. There's an emotional component at play as well. Traders emotionally tied to their positions might make irrational decisions.
Yes, and that emotional volatility can amplify market movements. The fear of missing out or fear of loss is a powerful motivator.
That seems to echo what we've seen historically. The 4-year cycle has provided a framework for many traders. But can it really dictate market behavior?
Well, I think what we're seeing is actually an interplay of psychology and market fundamentals. The cycles give traders something to anchor their decisions to.
That's an insightful perspective. Even if the cycles aren't perfect indicators, they shape perceptions and expectations.
Yeah, you're probably right. Traders may start adjusting their strategies, thinking that it's the end of a cycle, which can trigger a larger pullback.
And then you introduce the concept of somewhat arbitrary cycles, which may not account for real-world developments like regulation or global economic changes.
Absolutely. Market cycles are influenced by so many external factors. Just because a pattern has occurred in the past doesn't guarantee it will happen again.
Oh, for sure. It's almost like traders are trapped in a historical loop, where they rely on past performance instead of adapting to new information.
Right, and that can be a double-edged sword. On one hand, you're using historical analysis, but on the other, you risk missing out on important market signals.
Let me think about this for a second. It makes me wonder how many traders are actually looking at the fundamentals versus those who are strictly cycle-bound.
That's an interesting question. Most traders usually blend their strategy with both technical analysis and fundamental insights.
Exactly. It's this blend that often dictates successful trading. But right now, it feels like the technical indicators are overshadowing the fundamentals.
And that can create a disconnect. If traders are focused solely on the cycles, they might overlook crucial developments in the broader market.
Oh, and another thing that really stands out is how institutional players are potentially reacting differently compared to retail.
That's a good point. Institutional investors may have a longer-term view, so they are less likely to be swayed by short-term fluctuations related to these cycles.
And that could lead to a divergence in market behavior, as institutions might accumulate during dips while retail traders panic.
You know, if we see more institutional buying during these downturns, it could create a more stable support for prices.
Yes, and if retail traders continue to sell off their holdings based on cycles, that could potentially set up a very interesting landscape.
So to sum up our initial analysis, we've seen the crypto markets react strongly to the historical 4-year cycle expectations, but the reality is much more multifaceted.
Absolutely. It's a blend of psychological, technical, and fundamental dynamics all playing out at once.
Now, let's dive deeper into this situation. I think there's a lot more to unpack regarding how traders are interpreting these cycles.
Definitely, the 4-year cycle isn't just a mathematical pattern. It's also tied to trader psychology, and that itself is a complex web.
So historically, the narrative has always revolved around Bitcoin's halving events, which occur every 4 years. Do you think this still holds weight today?
That's interesting, Chase. The halving events traditionally generate a lot of hype and speculation, which can drive prices. But does that mean the cycle's significance is fading?
That's the crux of the discussion, isn't it? The relevance of these events may be changing as the market matures and as new players enter the arena.
And as we see more ETFs and institutional products come online, the influence of retail sentiment may diminish.
Right, and the increased sophistication of trading strategies among institutional investors could draw a clear line between past and present trends.
That's a fascinating perspective. If institutions continue to dominate the landscape, the volatility could change dramatically.
Exactly. Institutional participation brings a different level of analysis, one that often includes macroeconomic factors, regulatory concerns, and international events.
Well, I think that's important to recognize. Retail traders may focus too much on the cycles, ignoring these macro factors that institutions are considering.
And understanding these market dynamics is essential for anyone looking to navigate this space effectively.
Let me think about this for a second. It's almost like there are two distinct markets at play, one driven by emotional retail traders and another by calculated institutional strategies.
That's a valuable insight. The disconnection between these two could create significant opportunities and challenges.
Exactly. Those who can read these divergences well have a better chance of capitalizing on market movements.
And perhaps the biggest takeaway here is that understanding the emotional landscape of retail traders can provide context for these cycles.
And it also highlights the importance of taking a holistic view of the market, one that accounts for sentiment as much as it does for fundamentals.
Well, let's not forget that while cycles can guide expectations, they are ultimately just one piece of a larger puzzle.
Absolutely. And it might be wise for traders to focus on adaptability rather than rigidity when following these cycles.
That way, they won't get trapped in historical patterns that may no longer apply in the current market environment.
Right, and navigating this complexity requires continual learning and a willingness to adjust strategies as the market evolves.
It's a dynamic environment for sure, and one where the old rules might not apply as strongly anymore.
Now, as we turn to the expert analysis, I'm curious to see how analysts are interpreting these cycles and what recommendations they're offering traders.
That will definitely give us more depth. Many experts have different takes on whether the four-year cycle is truly a deterministic factor.
And it will be interesting to see whether they advocate for a more flexible approach or cling to the traditional definitions of this cycle.
Let's dig into that next. I think we might find some insights that could help our listeners navigate these turbulent times.
Absolutely. Understanding diverse viewpoints from experts may shed some light on potential strategies for traders.
Now let's dive into expert opinions on the significance of the four-year cycle on market behavior.
Yes, I'd love to hear whether they believe this cycle is still relevant or if it's just a relic of the past.
And we should also consider their thoughts on how psychological factors influence these cycles.
Very much so. It could help clarify whether retail traders should stick to their cycle-based strategies or diversify their approaches.
So let's proceed with this expert analysis to gain a broader perspective. It's crucial for understanding the market as a whole.
Right, I think we'll uncover some valuable insights that could help listeners position themselves better in the market.
So as we move into this exploration of expert opinions, let's keep in mind the complexities we've discussed.
Indeed. The more perspectives we gather, the clearer the picture will become.
Let's get started on this expert analysis.
Absolutely. I'm looking forward to what insights we can discover.
Okay, experts have been weighing in on whether traders should still rely on these cycles.
And interestingly enough, some analysts argue that while the cycles provide historical context, they shouldn't be the sole guide.
That aligns with our discussion earlier. They emphasize a more adaptable approach instead.
Yes, and many highlight the evolving nature of the market, especially with the influx of institutional players.
Exactly. They draw attention to how institutions may not be swayed by cycle expectations in the same way.
And this seems to create a disparity in how different market participants react to price fluctuations.
Absolutely, and some experts point to current data showing that volume is increasingly driven by institutional rather than retail activity.
That's a crucial point. If institutions are driving the market, it's essential for traders to reconsider how they approach price movements.
Exactly. Some analysts advocate for reviewing underlying fundamentals more regularly to gain a better insight into true market health.
That's a great strategy. It's about understanding the basics while recognizing the emotional aspects that can influence the market.
Right, and many experts are calling for a hybrid approach that balances both technical cycles and fundamental analysis.
That could provide a more holistic view of market movements, helping traders navigate through the noise.
And interestingly, some analysts even suggest that education is key. Traders should continuously update their knowledge.
Yes, continuous learning can empower traders to make informed decisions that align with current market realities.
And that applies to understanding the broader economic landscape as well, not just crypto-specific news.
Right. The more informed traders are about various factors, the better equipped they'll be to react sensibly.
And some experts believe that understanding macroeconomic indicators will become increasingly important.
Absolutely. I think we're entering an age where crypto will be more intertwined with global markets than ever.
Yes, and that means traders will need to expand their focus, looking beyond just cyclical patterns.
It's definitely a paradigm shift in how we approach trading.
Right traders who can adapt will likely thrive, while those who remain stuck in the past may struggle.
Well, I think the main takeaway here is the importance of flexibility. Trading isn't one size fits all.
Exactly. Each trader must find their unique path, combining elements of analysis that suit their approach.
So, as we wrap up this expert analysis section, it's clear that the four-year cycle is still a talking point, but perhaps not as definitive as before.
Yes, the consensus appears to lean toward being cautious about placing too much emphasis on historical cycles.
And I agree. This brings us to the audience focus segment. We want to dive into how these insights affect our listeners directly.
Absolutely. Our audience needs to know how to apply this information.
So, how can listeners better prepare for market fluctuations, given this analysis?
I think they should start by diversifying their information sources. Relying solely on cycle predictions may limit their perspective.
That's a valuable point. Engaging with multiple types of analyses can open new avenues for understanding market shifts.
Right, and they should consider developing a strategy that incorporates both technical and fundamental elements.
And keeping an eye on institutional behavior will be crucial, as that could signal larger market moves.
Exactly. If listeners can track institutional investments, they might better understand where the market is headed.
Yes, and they should also stay informed about macroeconomic trends that can influence crypto prices more broadly.
Right, being proactive about education is key. Taking courses, reading reputable sources, and connecting with other traders.
Absolutely. Networking with others in the community can lead to valuable insights and shared experiences.
And emotional resilience can't be overlooked. Traders should work on managing their emotional responses to market fluctuations.
That's a great point. Having a well defined trading plan can help keep emotions in check during volatile moments.
And don't forget about setting realistic expectations. The market won't always behave according to past cycles.
Exactly. And it's essential to remember that patience often pays off in the long run.
So to wrap up this audience focus segment, it's about adaptability, continuous learning, and emotional management.
Definitely, our listeners can navigate these market shifts more effectively by blending different analysis methods.
And they should keep their minds open to the possibilities while remaining grounded in facts.
Yes, and as we transition out of today's discussion, I think there are a lot of actionable takeaways.
Indeed, I hope our audience feels equipped to tackle the challenges posed by the end of the 4-year cycle.
Now let's move on to our next story, which hints at new developments in regulatory frameworks affecting the crypto space.
So let's talk about this exciting news from Astronova today. They just raised a substantial $48.3 million to expand their Web3 and AI entertainment ecosystem.
Absolutely. That's a significant amount, especially for a company developing no-code tools for creators. It really highlights a growing trend in decentralized creativity.
Exactly. The fact that their tools enable creators to launch blockchain-based entertainment experiences is particularly noteworthy. It lowers the barrier to entry, doesn't it?
Yes, it really does. By removing the need for extensive coding knowledge, they're empowering a whole new wave of creators who might have been sidelined in the past.
That's interesting because it opens up a whole new marketplace. We could see a diversification of content that we haven't experienced before.
Right, and think about it. These tools can foster creativity across various genres, from music to gaming, all built on blockchain technology.
Well, I think what we're seeing here is a convergence of entertainment and emerging technologies, creating an innovative way to engage audiences.
It's like they're tapping into the creator economy while also leveraging the security and transparency of blockchain.
You know what? It also raises questions about how traditional entertainment entities will respond to this disruption.
Definitely, established companies might need to rethink their strategies. Do they adapt or risk falling behind?
Right, and another consideration is the potential for community governance in these platforms. Creators might have a say in how the platform evolves.
That's a compelling point. It could shift the power dynamics away from corporations and back into the hands of individual creators.
And that could lead to more authentic content being produced. Creators aligned with their audiences, which could transform the consumption experience.
Oh, that's an exciting thought. Imagine a world where fan input actually influences the direction of projects.
Exactly. The implications for engagement and loyalty could be monumental. Fans would feel a real connection and ownership.
Yet, there will be challenges too. Managing a decentralized ecosystem fairly could be daunting.
Of course, the governance structures will need to be transparent and equitable. Otherwise, it could replicate some of the same issues seen in traditional models.
It's a fine line to walk, balancing power and ensuring that all voices are heard.
Yeah, and as we've seen in other projects, governance issues can quickly lead to disputes, which could hinder innovation.
So, how do you see Astronova positioning itself in this landscape? They must have a unique approach to attract that kind of funding.
Well, I think their focus on no-code tools is a strong selling point. It democratizes access to creation.
And that aligns perfectly with today's trends. People are looking for accessible solutions that empower them.
Right, and it demonstrates a deep understanding of the market. They're likely targeting a demographic that feels constrained by traditional platforms.
And this infusion of capital could help them scale and enhance their offerings, making them more appealing.
Yeah, I can see them expanding their toolkit to include more features that further streamline the creation process.
And perhaps even leveraging AI for personalized content recommendations.
Exactly. AI could play a huge role in curating experiences tailored to individual preferences, making the platform even more engaging.
What a time to be a creator. The possibilities are endless with these kinds of innovations.
Oh, and another thing that really stands out is the community aspect. Creators can collaborate more easily, share resources, and even support each other.
Collaborative efforts could lead to groundbreaking projects that none of them might have been able to achieve alone.
Well, let's dive deeper into the implications of this funding. Astronova isn't just raising money, they're tapping into a movement.
True, and we need to discuss how they'll utilize this funding strategically.
Yes, well, I presume part of their strategy involves marketing their platform effectively to attract creators.
And they'll likely need to build partnerships with existing content creators to establish credibility.
Absolutely. A few high-profile endorsements could really catapult their visibility and legitimacy in the space.
And they must also consider user experience. The easier it is for creators to get started, the more they'll be able to attract a varied user base.
That's a crucial element. If the onboarding process is too complex, it will deter potential users.
Right. And feedback loops will be essential. Astronova should be listening to its creators to refine the platform continuously.
Of course, a user-centric approach will not only improve their product, but also establish a loyal community.
And we can't ignore the competitive landscape. Other platforms will be paying attention to Astronova's moves.
Exactly. They'll need to remain innovative and vigilant. The pace of change in this space is dizzying.
So, how do you see this impacting the overall market for blockchain entertainment?
Well, if Astronova succeeds, it could inspire a wave of similar startups, further democratizing content creation.
That's true. More competition could lead to better tools and services for creators across the board.
And with increased adoption, we could see a significant shift in how entertainment is consumed and produced.
Plus, it might attract investors looking for the next big opportunity in crypto and entertainment.
Yes, indeed. The interplay between crypto and entertainment is becoming too significant to ignore.
It's becoming a vibrant ecosystem all its own, with unique challenges and vast potential.
That's a great way to put it. And so I think it's important to monitor how Astronova positions itself moving forward.
Absolutely. We'll want to see how they utilize this funding and whether they can live up to the hype they've generated.
And we may also need to consider how external factors, like market conditions, impact their growth trajectory.
For sure, the market can be unpredictable. Yet, if they capitalize on their current momentum, exciting things could follow.
It could set a new standard for what creators expect from platforms, pushing the entire industry forward.
And as we mentioned earlier, it's all about community engagement. Their success won't just be about the tools, it will be about the connections.
Exactly. Strong community ties could lead to innovative collaborations that redefine what's possible in entertainment.
So, as we wrap up, Astronova's journey is worth keeping an eye on.
Absolutely. Their unique approach to the entertainment landscape could be a game changer.
And it's a perfect example of how the crypto space continues to evolve, incorporating diverse sectors.
Yes, and as more creators join the fold, it will make for a richer, more dynamic ecosystem.
Well said, Chase. I think we have a lot to look forward to in this space.
Agreed. Innovation is just around the corner, and who knows what the future holds. So let's dive into the current state of the cryptocurrency market. We're seeing a cautious phase right now, especially after that strong Bitcoin rally. It appears investors are pulling back and reallocating their capital towards quality assets.
Absolutely, Chase. This pullback can shift the focus towards altcoins. But the current alt season index suggests that this isn't a fully synchronized altcoin rally. It seems like there's a lot of uncertainty influencing investor sentiment at the moment.
Indeed, Sabrina, historically, when Bitcoin experiences a pullback, many traders look to altcoins for potential gains, but the risk appetite is notably lower right now. It's critical for investors to assess which altcoins have fundamental backing rather than speculating on price movements.
That's a good point. The quality of the assets does matter significantly during these phases. Individuals should be cautious, especially since many altcoins might not have the same level of sustainability as Bitcoin.
Exactly. A lot of altcoins have seen hype-driven rallies, but without strong fundamentals, they may not hold their value in a pullback. This makes it imperative for investors to do thorough research before diving into any altcoin.
Right, and I think that's why the alt season index is crucial to monitor. It gives investors a clearer idea of how many altcoins are truly performing well compared to Bitcoin. As it stands, we're not seeing a significant number of altcoins outperforming BTC.
Yes, the index being far below the threshold for a true alt season indicates that many altcoins are still lagging. It's almost like a warning signal for investors to tread lightly. Capital preservation seems to be the goal right now.
Certainly, and the market psychology seems to be shifting toward risk-off sentiment. Investors are likely prioritizing stability over speculative investments, which is a smart move in uncertain times.
Absolutely, and with Bitcoin being the market leader, its movements have a cascading effect on the broader market. It's interesting to watch how each altcoin reacts to Bitcoin's price action.
It is, and that correlation is something that traders cannot ignore. If Bitcoin shows signs of recovery, it might spark some interest in altcoins. But until then, we need to keep an eye on the overall market sentiment.
Very true, and you also have to consider the external economic factors impacting the crypto space. Regulatory developments and macroeconomic events can significantly influence investor behavior.
Absolutely, Chase. Regulatory news has the power to either bolster or hinder market confidence. It's vital for investors to remain informed about these developments.
And let's not forget about the technological advancements within the blockchain space. Projects with strong tech backing are more likely to weather the storm compared to others without substantial use cases.
That's an excellent observation. Projects that can demonstrate real-world utility will likely attract a more stable investment community. It could be a differentiator in this cautious phase.
Yes, and we're seeing some altcoins begin to pivot towards more sustainable models, which could bode well for their future. However, distinguishing the contenders from the pretenders is crucial.
Indeed, and the presence of speculative trading can muddy the waters further. Many investors are looking for quick gains without considering the long-term implications.
Exactly, which is why education and awareness in this market are so critical. Many newcomers get swept up by short-term trends and often miss the bigger picture.
And this leads to volatility. When people rush into altcoins without thorough analysis, it creates a bubble that can burst just as easily as it forms.
Right, and it could take a while for the market to stabilize. It's essential for investors to remain patient and disciplined during these times.
Definitely, a cautious approach often leads to better long-term success. Investors should be prepared for fluctuations and always have a risk management strategy in place.
Exactly. And as we navigate through these uncertain waters, it's vital to focus on education and solid investment strategies rather than chasing trends.
Well said. Staying grounded in analysis rather than emotion can help investors survive and thrive, especially in a market that's oscillating so much.
Absolutely, and understanding market cycles can be a powerful tool. Recognizing when to enter and exit the market based on market sentiment is crucial.
It's all about timing, isn't it? And with the current caution prevailing, many investors might benefit from waiting for clearer signals before making significant moves.
Indeed, it's often better to miss out on a brief rally than to dive headfirst into a potentially declining market. A well-timed strategy can pay off in the long run.
So true. And as the market evolves, staying updated on both macro trends and specific project developments will be critical.
Yes, ongoing education is key. It's not just about what's happening today, but also about understanding what influences these markets over time.
Exactly. And being part of discussions, like the one we're having now, helps demystify the complexities of crypto for everyone involved.
Absolutely. Shared insights can lead to better decision-making. Plus, hearing different perspectives can illuminate important aspects we may overlook.
Exactly. And with the market being as dynamic as it is, flexibility in strategy can be a game changer. Adaptability is essential.
Well said. Markets change rapidly, and so should our strategies. Stagnation can lead to lost opportunities.
True. Keeping an open mind and being willing to pivot can lead to new insights and opportunities in this evolving landscape.
Indeed, and I believe that as Bitcoin maintains its dominance, it will continue to shape how altcoins perform. Investors need to stay vigilant.
For sure, with Bitcoin's movement serving as the pulse of the market, keeping track of its trends can provide valuable clues for altcoin investments.
Exactly, and as Bitcoin's price fluctuates, the broader market will often react. Understanding these correlations can be the key to successful trading.
Very true. Observing the price action of Bitcoin in conjunction with altcoin performance can reveal potential trading opportunities.
And yet it's also essential to avoid overreacting to short-term price movements. A clear head during turbulent times can lead to sound decisions.
Absolutely. Emotional trading is often detrimental. By sticking to a well-researched strategy, investors can weather the market's ups and downs.
And that's why continuous research and monitoring are crucial. Markets can change rapidly, and so must our approach.
Definitely, education doesn't stop. It's an ongoing journey in the crypto space, which is as exciting as it is unpredictable.
Absolutely. And as we see with this cautious phase, it's a reminder of how fluid the market can be. Adaptation is the name of the game.
Right, and as we navigate this, hopefully it provides lessons for future market cycles. Learning from the present is key.
Yes, and let's hope we see those lessons reflected in how investors behave moving forward. It's all part of the maturation of the crypto market.
Agreed. As the market evolves, we may see more stability and less speculative behavior in the long term.
And that could lead to better opportunities for everyone involved. A more informed investor base can only strengthen the ecosystem.
For sure. In the end, it all circles back to education, patience, and strategic thinking. If only more people would approach the market this way.
Absolutely, Sabrina. Well, that's a wrap for our discussion today. Let's keep our fingers on the pulse of the market. You know, Sabrina, this cautious phase is quite interesting. It really highlights how quickly sentiment can shift in the crypto space.
Right, and the way the market reacted after that Bitcoin rally shows how fragile confidence can be. Investors seem hesitant to commit fully amid such volatility.
Exactly. It's like a pendulum swinging back and forth. One moment there's euphoria, and the next we're throttling back to a more conservative approach.
And that kind of rotation can actually be a healthy sign for the market in the long run. It keeps us from entering a bubble situation.
True, the rotation also tends to favor projects with solid fundamentals. It's a chance for investors to reassess what's truly worth their capital.
Yes, and it's compelling to see how different altcoins are responding to Bitcoin's movements. Are they showing resilience or just lagging behind?
Some altcoins are indeed rallying, but it feels more like an isolated surge rather than a widespread wave. That's a key indicator of the current market mood.
Definitely. It feels like many investors are playing it safe, waiting for a clearer signal before diving back into the altcoin market.
And it's wise to be cautious. This isn't the first time we've seen an altcoin frenzy followed by a harsh correction.
Exactly. I think many are still reeling from the last major downturn. It's a tough lesson in risk management.
Well, that's why I always emphasize due diligence. It's crucial for investors to understand the projects they're backing.
Absolutely. In the current environment, the projects with tangible use cases seem to be capturing more attention.
For sure, the narrative around utility tokens is gaining traction as investors become more discerning.
That's a refreshing change from the previous hype cycles driven solely by speculation.
Yes, it really shows a shift in priorities. Investors are starting to realize that long-term growth requires more than just a catchy name.
And it's also about community engagement. Projects that actively communicate with their users are seeing more loyalty.
Indeed, community-driven projects often weather storms better. It's about building trust and fostering a loyal user base.
And that can make a significant difference during downturns. Loyalty can lead to stronger recovery potential.
Exactly. The projects that can navigate these conditions effectively will likely emerge stronger.
It seems like adaptive strategies are key. Those that can pivot quickly are the ones to watch.
Absolutely, adaptability is crucial. The crypto landscape is ever-changing, and flexibility can really set a project apart.
And we're seeing some projects innovate like never before. It's exciting to think about what's next.
Right? Innovation always brings about opportunities, but it also comes with risks. Balancing that is critical.
And that risk-reward dynamic is something every investor should assess carefully. Blind optimism can lead to significant losses.
Exactly. I always advise my clients to have a clear strategy that outlines their risk tolerance and investment goals.
That's solid advice. Without a defined strategy, it's easy to get swept up in market hype.
Totally. Remember, the market doesn't care about personal emotions. It reacts to data.
Well said. Having a data-driven approach can help mitigate emotional decision-making.
Yes, and it can also prevent investors from making knee-jerk reactions during market dips.
So true. Stability in investment approaches is essential, especially in our current climate.
And patience plays a big role. Those who can wait for the right opportunities instead of jumping in prematurely often fare better.
Indeed, it also allows for better evaluation of market trends rather than chasing after a temporary high.
Exactly. The focus should always be on long-term potential, not on short-lived spikes.
And with Bitcoin still leading the charge, altcoins will need to demonstrate solid performance to gain traction.
Right. Bitcoin acts as a bellwether. Its stability can either encourage or deter altcoin investment.
That correlation can be a double-edged sword. While Bitcoin rises, altcoins can sometimes lag.
True, and a lot of altcoins are often seen as higher risk, especially when Bitcoin's momentum wanes.
That's why we're not seeing the alt season index take off just yet. Investors remain cautious.
Exactly. Without a synchronized movement, bigger players might hold off on allocating to altcoins.
Well, let's hope that changes soon. A true alt season could rejuvenate interest across the board.
Absolutely. A sustainable alt season can also attract new investors who have been sitting on the sidelines.
And that influx of new capital could bolster projects that genuinely deserve it, creating a healthier ecosystem.
Yes, and it encourages innovation as well. More investment means more projects can flourish.
It's like a cycle. More investment can lead to better products and improved confidence, which in turn attracts more investment.
Exactly, and for that cycle to begin, we really need some indicators that the market is stabilizing.
Well, it all comes back to sentiment analysis. Understanding the mood of the market can provide valuable insights.
For sure, sentiment analysis can be a powerful tool, especially when combined with technical indicators.
And predictive analytics can help investors identify emerging trends before they catch on widely.
That's the sweet spot, really, being able to forecast movements based on data trends.
It's fascinating how data can influence decision-making in a market that's often seen as chaotic.
Well, the more information we have, the better our decisions can be. Data-driven insights will drive the next wave.
And as we become more sophisticated in our analyses, we could see a shift toward more responsible investing.
Absolutely, and the more responsible the investing, the less volatility we might experience.
That would be a welcome change. Stability can only help in building a more mature market.
Yes, and with maturity comes opportunities for institutional investment, which could be another game changer.
Agreed. Institutional involvement could lead to a lot more validation in the space.
And validation is key for mainstream adoption. It'll be interesting to see how this unfolds.
Definitely. The next few months could shed light on whether we're moving towards stability or further turbulence.
Well, I think it all circles back to how fundamental the projects are. Solid foundations will attract investors.
That's where education comes into play again. The more educated investors are, the better choices they'll make.
Exactly, and that's where conversations like this can make a difference in the community.
Absolutely. Encouraging informed discussions is essential for fostering a healthier investment environment.
We need to keep an eye on the overall market sentiment. When caution sets in, even the strongest altcoins can feel the impact of reduced liquidity.
That's a valid point. It makes me wonder if we might see investors pulling back to Bitcoin as a safe haven amidst uncertainty.
Exactly, and we've seen that pattern before. Bitcoin often acts like a barometer for the entire market.
So, we're essentially in a wait-and-see mode. It's fascinating how sentiment can dictate market movements.
Yes, market psychology plays a huge role. Investors tend to follow trends, even if those trends are based on fear.
Fear and greed are powerful forces. Right now, I sense more caution than enthusiasm brewing in the community.
That's true. The recent pullback in Bitcoin has made many rethink their strategies, especially with altcoins.
And let's not forget the importance of technological fundamentals in this phase. Some projects might still shine despite the overall sentiment.
Exactly. Projects with real-world use cases or unique value propositions are more likely to withstand the storm.
That's a good insight. But how can investors discern which projects have genuine value versus those just riding hype?
Look for transparency and active development. A project with a solid roadmap and a responsive team is often a good sign.
That makes sense. We should also encourage investors to check the community's engagement around these projects.
Absolutely. A strong community can often indicate trust and interest in a project's future.
But on the flip side, communities can also create echo chambers that might distort reality. It's a double-edged sword.
Right. Critical thinking is essential. Investors need to filter opinions and assess real data.
So, we're back to education again. It's all about empowering them to make informed decisions.
Exactly. The more they understand the underlying technology, the better their investment choices will be.
Speaking of technology, how are you viewing the recent developments in DeFi? Is it still holding strong?
DeFi is interesting, but I see a divergence happening. Some projects are indeed thriving, while others are losing steam.
That makes sense. The ones with real utility in lending or yield farming seem to be performing better.
Exactly, and sustainability is key here. Projects that can adapt to regulatory changes will have a competitive edge.
Regulation is a hot topic. I wonder how much it will influence investor sentiment in the coming months.
It's a balancing act. Stricter regulations might deter some investors, but they can also provide legitimacy to the industry.
True. It can filter out bad actors, but it also raises questions about decentralization versus regulation.
It's a paradox we're witnessing. The very principles of crypto challenge traditional financial norms.
Indeed, and this paradox can generate uncertainty, especially for new investors trying to navigate the space.
That's why guidance is crucial. Having mentors or resources can greatly aid in understanding complex scenarios.
Spot on, we need more initiatives to help first-time investors get a grasp on the volatile nature of the market.
And they also need to understand that volatility isn't inherently negative. It can lead to opportunities.
Exactly, but they must approach with caution. Playing the long game often yields better results.
Long-term strategy is essential. Chasing quick profits can lead to steep losses, especially in bear markets.
I agree. Patience is often underappreciated in this fast-paced market. It's a tough lesson to learn.
But it's a crucial one. Those who can weather the storm are often the ones who come out ahead.
So encouraging resilience among investors should be part of our mission as well.
Definitely helping them build a mindset that embraces both risk and opportunity is vital.
And understanding that losses are part of the journey can also help manage their expectations.
Exactly. It's all in the journey. Each setback can teach valuable lessons to future success.
So, moving forward, what indicators should we be watching closely in the market?
I'd suggest keeping an eye on trading volumes and market cap shifts. They can give clues about investor confidence.
Good call. Also, monitoring social media sentiment could provide insights into emerging trends.
Absolutely. Platforms like Twitter and Reddit can often reflect the mood of the community.
There's a lot of noise on those platforms, though. Filtering out the signal from the noise is key.
Yes, it takes practice. Investors need to cultivate a sensibility to differentiate hype from genuine insight.
Speaking of hype, do you think the NFT market will see a resurgence this year?
It's possible, especially as more use cases for NFTs emerge in art and gaming, but the initial frenzy has cooled.
That's true. I think there's potential for real-world applications to lead to a second wave of interest.
Exactly. Projects that focus on utility rather than speculation are likely to win over skeptical investors.
Well, that makes complete sense. It's about building lasting value in a market flooded with hype.
Right, and in tandem, regulatory clarity will help legitimize the NFT space further.
It seems like a lot is riding on how regulators choose to approach crypto and NFTs moving forward.
Indeed, it's a developing story that can significantly shape the landscape of digital assets.
It certainly is. We should keep a finger on the pulse of those developments as we move forward.
Agreed. Staying informed will help us guide our audience through the evolving narrative.
There's always something new on the horizon in crypto. It's what makes this space so exciting.
It's crucial to assess which altcoins are gaining traction. With Bitcoin's recent movements, investors are becoming more selective, focusing on projects with strong fundamentals and proven use cases.
That's a great point, Chase. Quality over quantity is really becoming the mantra right now, especially with so many projects vying for attention.
Exactly. When the market is in this cautious phase, the narrative shifts from speculation to stability. Investors often look for altcoins that offer real-world utility.
Utility is definitely key. It's interesting to see how projects like Ethereum and Chainlink remain in the spotlight, while lesser-known coins struggle.
For sure, Sabrina, the more established altcoins generally have a more robust infrastructure, which tends to attract long-term investors, especially during volatility.
And yet, there are still some promising new altcoins that are attracting attention. Do you think there's potential for smaller projects to break through?
There's always potential, but it requires a careful approach. The market can be unforgiving, and investors need to conduct thorough research before jumping on any bandwagon.
That's sound advice. It's easy to get caught up in hype, especially when there are social media influencers touting the next big thing.
Absolutely. Always remember that social proof doesn't equal value. It's essential to back claims with data and consistent performance.
Right. Also, market sentiment plays a huge role right now. Fear and uncertainty can lead to rapid sell-offs, especially in altcoins.
You've hit the nail on the head. Emotional trading often leads to missed opportunities or unnecessary losses.
This cautious phase might also lead to a shakeout, weeding out those projects that lack strong foundations.
Indeed, a shakeout can help reset the market. It allows stronger projects to emerge with a clearer pathway.
It's a bit like a cleansing process, isn't it? but it could be painful for many short-term traders.
Painful, yes, but often necessary. Those who endure may find themselves rewarded in the long term.
Speaking of rewards, how do you view staking and yield farming in this cautious climate?
Staking and yield farming can be attractive options for those looking to earn passive income. However, it's essential to evaluate the risks associated with each protocol.
Risk assessment is critical. Some yields may seem attractive, but could be fraught with hidden pitfalls.
Exactly. The potential for high returns often correlates with the degree of risk taken. Diversification is key.
That's a prudent strategy. In times like these, riding the waves of more stable assets while cautiously exploring altcoins might be wise.
Definitely. It's about balancing risk while remaining open to opportunities. Keeping an eye on market trends is crucial.
As the landscape shifts, those who adapt quickly tend to navigate through turbulent times better.
For sure, investors need to be agile and willing to pivot their strategies as new data emerges.
And let's not forget the importance of community in the crypto space. Strong communities can lend support during uncertain times.
Absolutely. Community involvement can often be a signal of a project's longevity and trustworthiness.
It's fascinating how social dynamics can influence market movements. Have you seen any communities rallying around specific altcoins lately?
Yes, some projects do have passionate followings that can drive engagement and, in turn, price appreciation. It's a double-edged sword, though.
Right. While enthusiasm can boost a project, it can also lead to irrational price spikes and subsequent corrections.
Exactly. This is why it's vital to approach any investment with a balanced perspective.
Such balance can prevent emotional decisions, especially when market volatility peaks.
Being level-headed in those moments is crucial. It often separates successful investors from those who panic.
True. Staying focused on fundamentals can help steer clear of impulsive trades.
Well said. It's all about finding that equilibrium between instinct and analysis.
As we look ahead, do you think we'll see any major shifts in market trends?
It's difficult to predict, but emerging technologies like NFTs and DeFi could propel some altcoins into the limelight.
Definitely. Innovation tends to spark interest and can lead to significant capital inflow if executed well.
Exactly. As projects innovate and improve their offerings, investors will naturally want to participate.
So, in a way, it's a continuing cycle of innovation and investment, leading to greater adoption.
Yes, exactly. The ecosystem is ever evolving, which is why it remains a captivating space to watch.
And as we observe these changes, education will be vital for investors to make informed choices.
Absolutely. Knowledge is power, especially in a landscape that's as opaque as crypto can be.
The more informed the investor, the better equipped they are to handle market fluctuations.
Well put, ongoing education should be a cornerstone of any investment strategy.
And with resources readily available, it's more accessible than ever for people to stay informed.
Exactly. The challenge lies in discerning credible information from noise.
Indeed, critical thinking is a must-have skill for anyone navigating this space.
In summary, staying informed and patient is key during this cautious phase.
Absolutely. Let's keep an eye on how the market evolves and share insights with our audience.
Agreed. Regular updates will help everyone make better, more informed decisions. The current market dynamics really illustrate how investors are moving towards safety rather than speculation. We've seen how the Bitcoin rally created an air of optimism, but as soon as it retreated, caution took center stage.
Right, this shift often leads to a search for value among altcoins. But as you mentioned, the alt season index suggests a lack of broad interest. It raises questions about whether investors are truly confident in these alternatives.
Absolutely, and it's crucial to look at the fundamentals of any altcoin before diving in. Some projects have solid use cases and community support, while others may not survive in a bearish environment.
Indeed, it's like sifting through a vast sea of projects to find the gems. Without a clear focus, many investors might end up with tokens that lack long-term viability.
Exactly, and we've seen it before. Tokens that once soared can plummet just as quickly. This is where thorough research and understanding project fundamentals can save investors from heavy losses.
That's a good point. It's really about making informed decisions based on data rather than hype. The social media narratives can often lead to irrational exuberance.
Yes, and keeping an eye on market sentiment is just as important as technical analysis. Community discussions, developer activity, and news cycles can significantly influence price movements.
Speaking of news cycles, have you noticed how regulatory developments are impacting investor sentiment recently? It feels like every new piece of news causes a ripple effect.
Absolutely. Regulatory clarity can have a dual effect. On one hand, it brings legitimacy, but on the other, it can create uncertainty and fear among speculative investors.
That's true. And we need to highlight the importance of investor education on these topics. Many people jump into crypto without fully understanding the implications of regulations.
Indeed, fostering a culture of informed investing is essential. It can help mitigate panic selling during downturns and promote more rational decision-making.
Furthermore, looking at the macroeconomic environment is also crucial. Factors like inflation and interest rates can greatly influence market sentiment and investment flows.
Yes, macroeconomic indicators often have a trickle-down effect on crypto markets. Investors are increasingly treating cryptocurrencies as part of their broader asset allocation strategy.
And with that comes a more sophisticated approach to investing in crypto. Those who understand the interplay between traditional finance and crypto can potentially benefit from volatility.
Exactly, and volatility is something we need to embrace. It brings both risks and opportunities, but it requires a careful and strategic approach to navigate successfully.
This cautious phase could last a while, but it's also a period for learning and refining strategies. What are some of the practices you think investors should adopt during this time?
Well, diversification is key. Spreading investments across different asset classes can help mitigate risk and cushion against sudden market moves.
I agree, and having a clear exit strategy is equally important. Knowing when to take profits or cut losses can prevent emotional decision-making.
Exactly. Setting clear targets helps maintain discipline and can be a crucial safeguard against market swings. Emotional trading can be detrimental.
Moreover, using stop-loss orders can act as a safety net. They can help automate selling decisions rather than relying solely on market sentiment in the heat of the moment.
That's a solid strategy. Additionally, maintaining a long-term perspective can help investors avoid getting swept up in short-term market fluctuations.
Definitely, those who keep their eyes on long-term goals are less likely to panic during downturns. It's all about aligning investments with one's risk tolerance.
Yes, understanding personal risk tolerance can dictate investment choices. This self-awareness can lead to more confident investing.
And it's essential for sustainability in this volatile market. Rushing into investments can lead to regret, especially when the market turns against you.
Quite right. Evaluating each investment not just on potential returns, but also the risks involved is an essential part of being a successful investor.
And I think we should emphasize the importance of community resources. Engaging with knowledgeable circles can enhance understanding and provide more context.
Absolutely. Communities often share insights and analysis that can be invaluable. Networking with other investors can broaden perspectives and reduce the feeling of isolation.
And in the age of information, effective communication within these communities can help counter misinformation and provide clarity.
Exactly. It's vital to cultivate spaces for constructive discussion, especially in an environment where misinformation can circulate rapidly.
You're making a good point. Forums and social media platforms can serve as both tools for education and, unfortunately, sources of confusion.
That's why critical thinking is essential when engaging online. Not every opinion is backed by research or logical reasoning, and discernment is necessary.
Well said. As we navigate this cautious phase, maintaining a curious yet skeptical mindset can help investors make sense of the noise.
Absolutely. Constantly questioning the information we receive can lead us to more robust investment strategies.
And aligning with trustworthy sources can provide a solid foundation for our insights. It's all about creating a strong knowledge base.
Yes, reliable content can empower investors to make educated decisions rather than acting out of fear or speculation.
Exactly. Fostering a knowledgeable investment environment can lead to healthier market behavior overall.
In this way, we can contribute to a more sustainable crypto ecosystem. Education and awareness should be at the forefront.
Definitely. I think as we continue to explore this topic, we should also consider inviting experts for deeper insights.
That's a great idea. Having diverse perspectives can enrich the dialogue and provide listeners with valuable takeaways.
And it could also help bridge the gap between seasoned investors and newcomers alike, creating a more inclusive community.
Right. Knowledge sharing is fundamental in building confidence and understanding within the crypto landscape.
Speaking of confidence, what do you think will be the next trigger for market movement? Any indicators we should keep an eye on?
Well, upcoming regulatory announcements could act as a catalyst. Additionally, any technological advancements within major blockchain networks can sway investor sentiment.
Those are good points. It's important to monitor not just the news, but also on-chain metrics that can provide insights into market health.
Yes, on-chain analysis can reveal user activity levels and momentum shifts, which are often leading indicators of price movements.
That's right. Tracking such data can empower traders to make proactive decisions rather than reactive ones.
Indeed, it's a proactive approach that can help manage risk while positioning for potential gains.
And as we wrap up this discussion, let's reassure our listeners that this cautious phase isn't inherently negative. It can lead to stronger market foundations.
Well said, Sabrina. Corrections can create valuable opportunities for those who are prepared and patient.
Exactly. Let's encourage our audience to remain vigilant and informed and embrace this time for growth.
Absolutely. This cautious phase provides a unique set of opportunities for strategic investors. Market corrections often sift out weaker projects, allowing only the most resilient assets to thrive. This consolidates the market and can lead to a healthier ecosystem. Thus, while altcoins may be lagging, we could see stronger players emerge.
That's a valid point, Chase. Investors should focus on the fundamentals of these altcoins, searching for those with solid use cases and development teams. It's crucial to avoid the noise and focus on long-term viability.
Exactly, Sabrina. It's about doing your homework and understanding what each project brings to the table. The current phase may appear dull, but it can be a time for refinement and realignment.
And as we see this cautious sentiment, it's also essential to consider macroeconomic factors. Inflation rates and regulatory updates continue to shape investor sentiment in the crypto space.
Right. The interplay between crypto and traditional markets is more pronounced than ever. When investors are uncertain about stocks, they might seek refuge in more established cryptocurrencies.
That's so true, Chase. The volatility of crypto means it can be seen both as a risk and a hedge, depending on market conditions. It's a balancing act for many investors.
Precisely. And this is where research into different tokens and their correlations with traditional assets becomes vital. Understanding these dynamics helps in crafting a well-rounded portfolio.
And let's not forget the psychological aspect of trading. Fear and greed can drive many decisions, especially in a turbulent environment like this. It's essential to stay grounded.
Absolutely, Sabrina. Emotions can cloud judgment and lead to hasty decisions. Establishing clear investment criteria can help mitigate those emotional responses.
Right, having a solid strategy makes a difference. It allows investors to stick to their plan rather than react impulsively to market swings.
Exactly. Patience is a virtue in crypto. Those who can hold through uncertainty often reap the rewards when the tide turns.
And it's also important to highlight the role of community sentiment. Social media and online forums can greatly influence perceptions of altcoins during these phases.
For sure, platforms like Twitter or Reddit can create waves of enthusiasm or fear. However, discerning the credible from the noise is crucial to informed decision-making.
And here, due diligence pays off. Follow influencers who provide analytical insights over mere hype. Quality information can lead to better investment choices.
Exactly. Following experienced analysts who focus on fundamentals can help filter out the sensationalism. This way, investors can align their strategies with real market trends.
And part of that alignment involves keeping abreast of regulatory news. Different regions are moving at their own pace, impacting market dynamics significantly.
Right, regulations can either bolster confidence or instill fear, depending on how they're perceived. Investors need to understand the implications of these changes.
Indeed, and being compliant can also protect investors from unforeseen risks. This reinforces the importance of understanding the regulatory landscape.
Absolutely. Compliance is not just a legal obligation. It can also enhance credibility for projects. That credibility can lead to increased adoption and ultimately value.
And as we see projects striving for legitimacy, it's fascinating how some are already integrating traditional finance practices into their operations.
Yes, that blurring line between crypto and traditional finance may lead to more mainstream acceptance. It's a promising development for the entire sector.
Certainly, this convergence opens up new avenues for institutional investment, which could stabilize prices over time. The more institutions engage, the more established crypto will become.
For sure, but this equilibrium also introduces new challenges, like increased scrutiny and potentially more regulation. It's all part of maturing as a market.
And while some investors might shy away from this volatility, it's essential to remember that established patterns can provide insights into future movements.
Absolutely. Historical data can guide strategic decisions. Observing previous cycles can help in predicting potential outcomes.
And while it's exciting to look at the data, one must also consider the human element in trading behaviors. Market psychology plays a massive role.
Well said, Sabrina. The herd mentality often leads to irrational exuberance or panic selling. Recognizing these patterns can help investors stay ahead.
Precisely. It's crucial for investors to develop a mindset that allows them to remain level-headed during market swings.
And that involves continuous education. Staying informed about market trends and technological advancements can make a significant difference.
Absolutely. By remaining educated, investors can make better informed decisions and avoid costly mistakes.
And let's not discount the importance of networking within the crypto community. Engaging with other knowledgeable individuals can enhance understanding and insight.
That's critical. Online and offline meetups create opportunities for collaboration and knowledge sharing. It's a great way to build a support system.
Yes, connection within the community can also lead to discovering new projects worth exploring, especially during cautious phases.
And as we explore new avenues, we must remain vigilant about security. The rise in scams highlights the need for robust security practices.
Definitely, as the market evolves, so do the tactics of malicious actors. A vigilant approach to security can save investors from significant losses.
And that means being cautious about where and how crypto assets are stored. Cold wallets, for instance, offer enhanced security compared to exchanges.
Exactly. Educating oneself on secure storage methods can mitigate risk. This should be a top priority for any serious investor.
For sure. And as we invest and store, using multi-factor authentication and other security measures strengthens overall protection.
Absolutely. Layering security measures is vital in this landscape. It's better to be overcautious than to face the consequences of a breach.
And it's a reminder that while the market may present opportunities, it's crucial to be aware of the risks involved. A balanced approach is key.
Indeed, this conversation really emphasizes the need for a holistic understanding of the market. Preparing for risks while remaining open to opportunities is foundational.
Exactly, Chase. As we conclude, let's remind our listeners to embrace this cautious phase as a time for growth, learning, and strategic positioning.
Well put, Sabrina. Staying informed and adaptable will ultimately lead to successful navigation through the ever-evolving crypto landscape.
To sum it up, whether it's seeking quality assets or enhancing security, a thoughtful approach to investing ensures resilience even in cautious times.
Absolutely. Thank you everyone for tuning in. As always, stay curious and keep learning. So let's dive into the regulatory landscape for cryptocurrencies, Sabrina. It's clear we're witnessing a phase of moderation where regulators are attempting to catch up with the rapid developments in the crypto world.
Absolutely, Chase. It's fascinating how initiatives like crypto ETFs are creating pathways for broader adoption. Yet there's still a hesitance from regulators regarding the safety of these ventures.
Right, and while ETFs can democratize access to crypto, the underlying concern remains about market volatility and investor protection. Regulators are wary, given the dramatic price swings we've seen.
And that makes sense. The challenge is balancing innovation with the need for regulatory oversight, especially as these products become more mainstream.
Exactly. There's a noticeable tension between fostering innovation and protecting consumers. Licensing regimes are an important step, but they also reflect the uncertainty regulators face.
It's interesting to see different countries adopting various approaches. Some are more open to experimentation, while others approach with caution, influenced by their local economic contexts.
Indeed, and cross-border payment innovations add another layer of complexity. With differing regulatory environments, it's tough for companies to navigate these waters seamlessly.
Yes, and it complicates things further when you consider exchanges operating in multiple jurisdictions. They have to adapt to a patchwork of regulations, which can stifle innovation.
And yet, the growth we see in decentralized finance suggests a pushback against traditional regulatory frameworks. People are gravitating towards solutions that provide more autonomy.
Exactly. And that defiance could lead regulators to rethink their strategies. They may need to find ways to integrate emerging technologies into their existing frameworks.
That's a tall order, though. Regulatory bodies aren't necessarily equipped with the technology or expertise to understand the nuances of blockchain.
True, and that indicates a significant gap that needs to be addressed. Collaboration between tech experts and regulators could be a pathway towards more effective regulations.
Potentially, yes, but it also raises questions about who gets to shape the narrative. Should regulators be the primary decision makers in the crypto space?
That's a contentious point. It might be more effective to have a collaborative, multi-stakeholder approach to ensure diverse perspectives are included.
Absolutely. The inclusion of voices from the crypto community could foster more informed regulations. We're all aiming for a safer, more effective market.
And speaking of safety, the recent tightening of cross-border transaction rules seems more like a cautionary measure than an obstacle to innovation.
Yes, it's a double-edged sword. While it might slow down illicit activities, it could hinder legitimate companies trying to expand beyond their local markets.
That's precisely the issue. We must ensure that while preventing fraud, we don't choke off the potential of healthy growth.
And it's a dynamic landscape. Just when we think we've figured out a regulatory pathway, new challenges like technological advancements emerge.
Right, and it's worth noting that some regulators are actively engaging with the crypto community to anticipate these challenges. Awareness is a huge first step.
Definitely, the awareness alone can lead to better informed regulations that actually reflect the realities of the crypto market.
But with all these changes, how do you think retail investors can best navigate this evolving landscape?
I think education is paramount. Retail investors need to stay informed about regulations, but also the fundamentals of the technologies behind their investments.
Agreed, and with the myriad of new products emerging, it's crucial for them to discern between genuine opportunities and potential pitfalls.
Absolutely. And that's where transparency becomes vital. Investors should demand clearer information about risks and regulatory status from exchanges and platforms.
It all circles back to accountability in the industry. Without it, investor confidence will remain fragile, hindering broader acceptance.
Exactly. Regulatory bodies must ensure that there's a level of trust established in the market. It's not just about compliance, it's about fostering a safe ecosystem.
And when consumers feel secure, they're more likely to adopt and utilize cryptocurrencies in their daily lives.
Indeed, the transition to a more moderate regulatory approach is crucial. It's a balancing act, but we're making progress.
Well, I suppose only time will tell how effective these new regulations will be in practice. It's an ongoing evolution.
Absolutely. And as we move forward, staying adaptable and responsive to changes will be key for both investors and regulators.
That's a solid point, Chase. The crypto world is notorious for its unpredictability, and regulators need to adapt just as quickly.
Right, and this adaptability can lead to a more resilient market. It's all about creating a landscape that's robust enough to handle shocks.
It sounds like we're on the path to someone finding that balance. The question is, how will different countries approach it?
Exactly, and that'll depend largely on their economic priorities and their stance towards technology as a catalyst for growth.
It's a complex interplay, for sure. Countries that embrace innovation might find themselves at an advantage in the global market.
I couldn't agree more. The nations that foster supportive regulatory environments could attract investment and drive tech advancements.
And then there are those conservative countries that may fall behind if they don't find a way to integrate these innovations.
Precisely, the risk of getting left behind is real, and it's a lesson that many regulators around the globe are beginning to understand.
It's a fascinating moment in history. As these changes unfold, I think we can expect ongoing conversations about the intersection of technology and regulation.
Absolutely, the dialogue is essential, and keeping channels open between the crypto community and regulators will pave the way for a better future.
Well, this was an insightful discussion, Chase. It'll be interesting to see how this all plays out in the coming months.
Definitely, Sabrina. I'm looking forward to monitoring the developments and how they influence the crypto landscape.
Let's not forget about the role of public perception in all this. How people feel about crypto can directly impact regulatory decisions.
That's a great point. Public sentiment can lead to pressure on regulators, pushing them to act or react to emerging trends.
Indeed, and the media has an important role to play in shaping that narrative, educating the public about both risks and benefits.
Exactly. It's a responsibility that shouldn't be taken lightly, as misinformation can have real consequences in the crypto space.
Definitely, a well-informed public is crucial for healthy market dynamics. People need to understand what they're investing in.
And that understanding is vital for fostering a culture of responsible investing rather than speculative trading.
Agreed. The road ahead will require vigilance, flexibility, and a willingness to adapt on all sides.
Well said, Sabrina. The next few years feel pivotal as we navigate this evolving regulatory landscape together.
Absolutely, the journey will be compelling, and I look forward to continued discussions as these developments unfold.
Same here. Let's keep this dialogue going as we witness the transformation of the regulatory landscape in real time.
Definitely. Thanks for sharing your insights today, Chase. This discussion has been enlightening.
Thank you, Sabrina. It's always a pleasure to explore these topics with you. Until next time.
Until next time, Chase. Looking forward to our next conversation on this ever-evolving topic.
Well, as we dive deeper into this regulatory transition, it's crucial to understand the implications for crypto investors. The moderation might lead to a more stable environment, but it could also stifle innovation if regulations are too stringent.
That's an interesting point, Chase. The balance between innovation and regulation is delicate, and it remains to be seen how regulators will approach enforcement without discouraging growth in the sector.
Exactly. The introduction of clearer licensing frameworks can provide a foundation for legitimacy, which is essential for institutional adoption. However, if it becomes overly burdensome, smaller players might struggle to compete.
Indeed, and we've seen that happen in other industries before. The larger firms often have the resources to absorb regulatory costs, while startups may find themselves at a disadvantage.
That's why the idea of sandbox environments is intriguing. They allow for experimentation under regulatory oversight, which can foster innovation while still addressing potential risks.
Yes, sandboxes could be a win-win solution if implemented correctly. They can give startups a chance to innovate without the fear of immediate penalties for non-compliance.
Moreover, as we see cross-border payment innovations taking shape, it's essential for international regulations to harmonize. Fragmentation can create significant operational challenges for companies operating in multiple jurisdictions.
Right. Multinational regulations can be complex. A lack of standardization might lead to confusion and inefficiencies, hindering the very goals that blockchain technology aims to address.
Well, regulators will need to navigate that carefully. Collaboration among countries could lead to a more cohesive framework, which ultimately benefits everyone involved.
That sounds optimistic, but it feels like we're still far from that level of cooperation. Political will often complicates these discussions, especially with varying interests at play.
True, political motivations can often cloud rational decision-making. It's important for stakeholders to advocate for balanced regulations that prioritize safety without stifling innovation.
And public sentiment plays a role too. We've seen how negative media coverage can sway regulators' actions, sometimes leading to knee-jerk reactions that aren't beneficial long-term.
Absolutely. Transparency and education are vital in shaping public opinion and influencing regulators. If people understand crypto better, they might support more reasonable regulations.
Exactly. Financial literacy around cryptocurrencies has to improve, not just for investors, but for regulators as well. If they have a clearer understanding, they can create more informed policies.
Perhaps partnerships between advocacy groups and regulatory bodies could foster this dialogue. It would help bridge the knowledge gap and create a more collaborative environment.
I agree that could lead to constructive outcomes. Having industry voices at the table can help demystify the technology and its potential benefits.
Right, and it's also important for the industry to self-regulate to some extent. Establishing best practices can show regulators that the crypto space is mature and responsible.
Definitely, industry-led initiatives can enhance credibility. When companies demonstrate ethical conduct, they can build trust, not only with regulators, but also with the general public.
Well, it's encouraging to see some organizations investing in compliance measures proactively. It reflects a commitment to long-term sustainability, which can counteract negative perceptions.
And that's important as the market matures. As potential investors watch how companies respond to regulation, their confidence in the overall market may be strengthened.
Exactly. A more mature market can lead to increased participation. That interest could bring liquidity and stability, which are crucial for the evolution of cryptocurrencies.
Signs of mainstream adoption, like those ETF approvals we mentioned, demonstrate that even traditional financial institutions are recognizing the value of digital assets.
Yes, and as financial products evolve, it's essential for regulators to keep pace. They need to understand these products thoroughly to draft meaningful regulations.
The fast-paced nature of crypto undoubtedly presents a challenge for regulators. Keeping up with innovation while ensuring investor protection is no easy feat.
True, and the rapidity of tech advancements amplifies the need for adaptable regulatory frameworks. Fixed regulations can quickly become obsolete.
That creates a real dilemma. If regulations are too flexible, they might fail to enact the necessary protections that prevent fraud and misconduct.
Exactly. Finding that sweet spot between flexibility and security is crucial for fostering an environment where crypto can thrive responsibly.
Well, it seems like engaging a diverse range of stakeholders in the regulatory process could help achieve that balance. Input from technologists, investors, and consumers is essential.
Absolutely. The more perspectives that regulators consider, the more comprehensive their approach can be. It's about creating a regulatory ecosystem, not just individual rules.
And that ecosystem needs to be resilient. In the case of economic downturns, regulations should help stabilize the market rather than exacerbate volatility.
Well put, Sabrina. Resilience is key. Effective regulation can act as a stabilizing force in turbulent times, offering reassurance to investors.
Exactly. It's about creating a safety net without imposing overly restrictive measures that could hinder growth. So, what do you think is the most significant risk right now?
I believe the biggest risk stems from regulatory uncertainty. The lack of clarity can lead to hesitance in investment decisions, which ultimately affects market momentum.
That makes sense. If investors are unsure about the rules of engagement, they may sit on the sidelines rather than actively participating.
Exactly, and it's cyclical. The more stakeholders hesitate, the slower the adoption rate becomes, which can perpetuate that uncertainty.
Well, it's troubling because those delays could hinder technological advancements that depend on investment and experimentation.
Right, if funding dries up due to regulatory ambiguity, the innovation that drives this industry could suffer significantly.
That's an important point, Chase. How do you see companies responding to this regulatory uncertainty? Are they adapting effectively?
Many companies are indeed taking proactive measures, investing in compliance teams, and engaging with regulators to create a dialogue.
That's promising. A proactive approach can help build credibility with regulators, which in turn can lead to more favorable treatment in the long run.
Exactly. Those companies that demonstrate a commitment to compliance are likely to be viewed as partners rather than adversaries by regulatory bodies.
Well, and that collaboration could result in more tailored regulations that truly reflect the unique characteristics of the crypto market.
True, it could lead to a regulatory framework that evolves alongside the industry, allowing for continuous improvements and adaptations as new challenges arise.
That would be ideal. It fosters growth and security at the same time. So, do you think regulators are ready to embrace that level of flexibility?
It's difficult to say. Many regulators are still in the learning phase, so true flexibility might take time to materialize as they become more comfortable with the technology.
That's a realistic assessment. They might need to see more successful case studies of self-regulation before they feel confident enough to loosen their grip.
Exactly. Education and transparency can help accelerate this process. The more they understand the benefits, the more willing they might be to adapt.
Well, it seems like we have a long road ahead, both for the industry and the regulators. There's a need for continuous dialogue to ensure that progress remains steady.
Definitely, and I'm optimistic that as we see these discussions unfold, more cohesive policies will emerge that can accommodate growth while ensuring safety.
That's an encouraging note to end on, Chase. I appreciate your insights as always, and I look forward to our next discussion.
Thank you, Sabrina. It's always a pleasure to chat about these evolving dynamics. Until we meet again.
Until next time, Chase, I look forward to diving deeper into these topics as they develop.
Absolutely, it's a fascinating journey ahead. It's interesting to see how this regulatory moderation could actually foster innovation. As governments become more comfortable with crypto, we might see a surge in compliant financial products that appeal to traditional investors.
That's true. But we should also consider the potential pitfalls. If regulations aren't well defined, innovation could stall as companies navigate an unclear legal landscape.
Exactly, and it's a balancing act. Regulators need to provide enough clarity without stifling creativity or discouraging investment in new technologies.
Right, and it seems we're seeing regulators trying to play catch up with the pace of innovation. The introduction of new frameworks is a good sign, but lagging behind could lead to a loss of competitive edge.
Agreed. If we look at countries that have already established clear regulations, they could become hubs for crypto development, attracting talent and capital.
That raises an important question about jurisdiction. As companies operate globally, how can they navigate the differing regulatory environments effectively?
Jurisdictional challenges are a big part of the conversation. Companies often have to develop strategies that comply with multiple regulatory regimes, which can complicate their operations.
And this is where the role of technology can be pivotal, right? With tools like smart contracts and blockchain, businesses can create solutions that offer compliance across various jurisdictions.
Indeed, technology has the potential to serve as a bridge. Smart contracts could automate compliance processes, making it easier for companies to adhere to regulations while maintaining efficiency.
That sounds promising. But what about the security aspect? With an increase in regulatory scrutiny, how do we ensure that these technologies remain secure against potential exploits?
Security is paramount, and as regulations evolve, so must our approaches to safeguarding these technologies. Auditing protocols and robust cybersecurity practices will be essential in maintaining trust.
Speaking of trust, how do you see public perception changing as regulations become more established? Could a well-regulated environment lead to greater acceptance of crypto?
Absolutely. Public confidence often hinges on perceived safety and legitimacy. As consumers see more robust regulations, they might become more willing to adopt crypto for everyday transactions.
That shift in perception could also attract institutional investors. If the regulatory environment is stable, we could see a significant influx of institutional capital into the crypto space.
Definitely, and institutional players often bring credibility and liquidity to the market. Their participation could lead to more stable pricing and a less volatile environment overall.
Yet, volatility is inherent to crypto. Do you think a stable regulatory framework could lead to a complete dampening of that volatility?
While regulation might reduce some volatility, it won't eliminate it entirely. Market dynamics such as supply and demand will always play a significant role regardless of the regulatory landscape.
That's a valid point. And with the increasing number of new crypto projects emerging, maintaining clarity and legitimacy will be crucial to avoid confusion among investors.
For sure, an influx of new projects can create a mix of innovation and risk. Regulators will need to ensure that investors have access to accurate information to make informed decisions.
Education is vital in this space. The more educated the market is about risks and rewards, the better positioned it will be to embrace cryptocurrencies.
Exactly, and that's where collaborative efforts between regulators, educators, and industry leaders come into play. It's a multifaceted approach that will yield better results.
It's refreshing to see that collaborative spirit emerging. It seems like a necessary foundation for a sustainable crypto ecosystem.
Indeed, without that collaborative mindset, the industry's growth could be stifled by confusion and misalignment among stakeholders.
And what about the global stage? How do you think international cooperation on regulations will affect the crypto landscape?
International cooperation could streamline processes significantly. If countries can align their regulatory frameworks, it would simplify cross-border transactions and foster greater global adoption.
That sounds like a boon for global commerce, but what challenges do you foresee in achieving that level of cooperation?
One of the biggest challenges is differing economic priorities. What works for one country might not align with another's interests, creating barriers to consensus.
True, and on top of that, the political climate can influence how countries approach regulation. It's not just about economic interests.
Exactly. Political stability and leadership can significantly impact the pace and nature of crypto regulations in different jurisdictions.
So, where does that leave investors? How should they navigate this complex and sometimes unpredictable regulatory landscape?
Investors should stay informed and adaptable. Understanding the regulatory environment will help them make better investment decisions and mitigate risks.
And diversification can play a key role, right? By spreading investments across different assets and jurisdictions, investors could buffer against regulatory shocks.
Absolutely. A diversified portfolio can help cushion impacts from regulatory changes in specific regions, making it a smart strategy.
It seems that staying flexible and informed is crucial. Do you think we'll see any major shifts in investment patterns as regulations evolve?
Definitely. As investors gain confidence in regulatory clarity, we may see a stronger shift toward more legitimate projects rather than speculative investments.
That shift could create a healthier market overall, promoting sustainability in the long run. But what key indicators should investors watch for?
Investors should keep an eye on legislative developments, regulatory announcements, and the establishment of compliance frameworks. Each of these will signal how the landscape is shifting.
And let's not forget about market reactions to these developments. Sometimes, the way the market interprets news can differ significantly from what regulators intend.
Exactly. Market sentiment can be volatile and can lead to overshooting or undershooting in prices, based on speculative reactions rather than fundamentals.
This unpredictability is a reminder for investors to do their own research and not solely rely on the market's immediate reactions.
Exactly. Critical thinking and careful analysis will be essential as the regulatory landscape continues to evolve.
That's a good point. Right now, being proactive rather than reactive can make a significant difference for investors in the crypto space.
Completely agree. It's about anticipating changes and positioning oneself accordingly to take advantage of new opportunities.
There's so much to unpack, and it all seems to be leading us toward a more structured yet dynamic future for crypto.
It truly is a transition phase, and while it's filled with uncertainty, it's also brimming with potential. The winners will be those who adapt and grow.
And that adaptability will likely come from a combination of education, collaboration, and ongoing analysis of the regulatory environment.
Absolutely. Those who engage with the ecosystem thoughtfully will thrive as the crypto landscape matures.
On that note of collaboration, how can the media play a role in shaping a better understanding of the evolving regulations?
The media has a pivotal role in educating the public. By providing clear, nuanced insights, it can help demystify the regulatory complexities and highlight responsible practices.
That's crucial, especially when sensationalized news can skew public perception. Responsible journalism can bridge the gap between complex regulations and everyday investors.
Absolutely. The media can help present the facts, outline the implications of regulation, and provide context about the underlying technologies.
It sounds like a partnership between the media and regulatory bodies would be beneficial. Transparency and communication should be prioritized.
Completely. Such partnerships could foster a well-informed population that understands the nuances of both crypto and the regulations governing it.
And that understanding could lead to a more engaged and responsible investor base, which would benefit the entire ecosystem.
Exactly. The more informed everyone is, the more robust and resilient the crypto market will become.
As we wrap up, what are your key takeaways regarding the future of the regulatory landscape for cryptocurrencies?
I believe we're entering a pivotal moment where clarity and collaboration can truly transform the industry. The path ahead may be complex, but the opportunities for growth are immense.
I share your optimism, Chase. With the right approach and engagement from all parties, we could see a landscape that supports innovation while protecting consumers.
One key aspect to consider is how these regulations could vary significantly from region to region. For instance, while some countries are embracing cryptocurrencies, others are imposing strict bans. This disparity can create a fragmented market that complicates global operations.
Absolutely, Chase. It's intriguing to see how some nations could become crypto havens while others remain resistant. This could lead to capital flight towards more favorable jurisdictions, altering the competitive landscape.
Exactly. And it's not just about regulatory environments, it's also about the talent that those jurisdictions can attract. Countries that foster innovation and provide a solid legal framework may harness the most advanced projects and startups.
That makes sense. The availability of talent can be a decisive factor for the success of crypto projects. If developers feel restricted or undervalued, they might choose to relocate, which can be detrimental to countries with less favorable policies.
And let's not forget about the role of public sentiment in shaping regulatory decisions. If citizens advocate for a more open approach to cryptocurrencies, policymakers may feel pressured to adapt. This push from the ground up can be quite powerful.
Right, public perception can drive significant changes in legislation. For instance, positive media coverage can raise awareness and encourage mass adoption, prompting governments to rethink their stances on crypto.
A great example of this is the growing interest in Bitcoin as a hedge against inflation. As more people recognize its potential value preservation, we might see a shift in how governments perceive and regulate it.
Indeed, the economic climate plays a major role in this conversation. During times of economic uncertainty, people often seek alternatives, making cryptocurrencies more appealing.
However, with that appeal comes the responsibility for sound regulation. Regulators need to protect investors from fraud without stifling innovation, which is a delicate balance to strike.
That's a critical point. Overregulation could push innovation underground, while underregulation could expose consumers to significant risks. Finding that middle ground is essential for sustainable growth.
Additionally, we can't overlook the influence of institutional investors. As they enter the market, their demands for clearer regulations could prompt faster movements toward a more structured environment.
True, institutions often have the resources to lobby for favorable regulations, potentially accelerating the maturation of the market. Their participation could lend further legitimacy to the entire sector.
Moreover, institutional adoption could also drive technological advancements. As large players push for better security measures and transaction efficiencies, this would ultimately benefit the entire ecosystem.
And with advancements in technology, we may see new financial products emerge, such as tokenized assets or decentralized finance solutions that could redefine how we interact with money.
That's an exciting prospect. However, these innovations must be developed with compliance in mind to avoid regulatory pitfalls that could hinder their adoption.
Right, and education will play a crucial role here. If both consumers and regulators are well informed, it can lead to more meaningful dialogues and fruitful collaborations.
Absolutely. And as the regulatory framework evolves, so must the educational efforts. Without a solid understanding of the technology and its implications, skepticism will likely persist.
Skepticism can often stall progress. That's why transparency from crypto projects is vital, as it helps build trust with both investors and regulators.
Furthermore, transparency can also mitigate the risk of bad actors entering the space. If regulations promote accountability, it will lead to a healthier market overall.
Exactly. We've seen too many scams in the crypto world, which only reinforces the need for clear regulations. It's about making it a safer environment for everyone involved.
Indeed, and safety will be paramount as adoption increases. More users mean a larger target for bad actors, so security measures must evolve accordingly.
And that puts pressure on projects to prioritize security from the very beginning, rather than treating it as an afterthought. It's a challenge, but one that must be addressed.
Exactly, Sabrina. The best solutions will integrate both security and user experience seamlessly. Finding that balance is key to retaining users in the long term.
True. User experience can make or break a platform. If the onboarding process is cumbersome, it will deter new users from even exploring what crypto has to offer.
And I think that's where continuous feedback mechanisms are crucial. Ongoing dialogue with users can help projects adapt and improve their offerings.
Definitely, engaging with the community not only fosters loyalty, but also aids in identifying pain points that can be addressed swiftly.
Moreover, fostering a sense of community around crypto projects can also help mitigate misinformation. A well-informed community can act as advocates for the project.
That community aspect is powerful. When users feel a connection to a project, they are more likely to support it through ups and downs, contributing to its stability.
It's a double win, really. You cultivate loyalty while also enhancing resilience against market volatility and negative press.
And as the market matures, we'll likely see more collaborative efforts between different projects as well. Interoperability can open up new avenues of growth.
Certainly, cross-chain compatibility will be a game changer. It could create a unified ecosystem that serves various user needs without fragmentation.
And with that, we could see an exponential increase in utility for cryptocurrencies. When users can seamlessly interact across platforms, it enhances their overall experience.
True. Plus, enhanced utility can serve as a catalyst for further regulatory evolution as policymakers start to recognize the functional value of these assets.
Exactly, Chase. The more integrated cryptocurrencies become in everyday transactions, the harder it will be for regulators to ignore their influence on the economy.
And therein lies the opportunity for constructive dialogue between innovators and regulators. If both sides can find common ground, it could lead to significant advancements.
That common ground is essential for progress. We need to encourage a collaborative rather than adversarial relationship to thrive in this space.
And fostering that spirit of collaboration can yield a framework where innovation can flourish while ensuring consumer protection.
It's all about balance, isn't it? As the landscape changes, achieving that equilibrium will be pivotal for sustaining long-term growth.
Indeed, with the right mindset and proactive approaches, the regulatory landscape could evolve in a way that empowers individuals and fosters innovation.
And that's why it's so vital for everyone involved to stay engaged and informed. The future of cryptocurrencies will depend on active participation from all stakeholders.
Yes, the journey is just beginning, and as we move forward, keeping communication channels open will help us navigate the challenges ahead.
Absolutely. Active dialogue can not only promote understanding, but also lead to the creation of regulations that are both effective and adaptable.
And as this regulatory landscape evolves, we should keep an eye on emerging trends that could signal shifts in how the market operates.
Indeed, staying ahead of the curve will be crucial for investors and developers alike, as the landscape can change rapidly.
Ultimately, a proactive approach will empower everyone in the ecosystem, whether you're an investor, a developer, or a regulator.
Well said. Embracing change and remaining adaptable will be the key to thriving in this exciting yet complex environment.
And as we witness this evolution, it's clear that the crypto community has a unique opportunity to shape its future.
Indeed, Chase, it's going to be fascinating to watch how these developments unfold, and I'm looking forward to discussing them with you in the future.
Me too, Sabrina. As always, it's a pleasure to exchange ideas and insights with you. Until next time. As we transition into this new regulatory phase, it's crucial to acknowledge the balance regulators are seeking. They're trying to protect consumers while also fostering innovation, but that tension can lead to uncertainty.
Absolutely, Chase. The uncertainty can deter potential investors who might be waiting for more clarity before diving into the crypto space.
Right, and that's why we see these new licensing regimes popping up. They could provide a framework that not only legitimizes the industry, but also instills confidence in consumers.
Exactly. And with the emergence of crypto exchange-traded products, we're witnessing a pivotal moment. It allows traditional investors to dip their toes into crypto without fully committing.
Indeed, it's a bridge for mainstream investors. However, we must rely on transparency from these products to ensure they're not just tools for speculative trading.
Transparency is key, and it's something that regulators are increasingly emphasizing. The more clear the rules, the less likely we'll see the kind of market manipulation we've witnessed in the past.
Exactly, and the tightening of cross-border transaction rules is another significant move. It reflects the need for regulatory oversight on an international scale.
It's interesting how these efforts could lead to a more unified approach towards crypto regulation across different countries. It'll be intriguing to see if this leads to a global standard.
A global standard could indeed reduce friction, making cross-border transactions much smoother. However, achieving consensus among nations is a monumental task.
Right, and with varying economic interests at play, that consensus could take time. Meanwhile, we might see more experimental approaches on a regional level.
Yes, regional frameworks could act as testing grounds for what works and what doesn't. This could ultimately inform a more cohesive global strategy.
And let's not forget about the importance of educating consumers about these changes. A well-informed public is vital for the long-term success of crypto adoption.
Absolutely. Education is crucial. Without it, even the best regulatory frameworks could fall flat if the public remains skeptical.
Skepticism often comes from fear of the unknown. The more clarity we provide, the better equipped people will be to make informed decisions.
Exactly. And as we move forward, the role of journalists like you is vital in disseminating information. You help bridge that gap between technical complexities and general understanding.
Thank you, Chase. It's a responsibility I take seriously, especially in a field as dynamic as cryptocurrency.
As this landscape evolves, I anticipate seeing a surge in regulatory technology, or RegTech, to help companies comply with emerging rules.
That's a fascinating point, Chase. RegTech could streamline compliance processes, allowing crypto firms to focus more on innovation rather than regulatory burdens.
For sure. And as more businesses adopt these technologies, we might find a more harmonized approach to compliance across the industry.
That harmonization could certainly enhance trust. If every player is held to the same standards, it levels the playing field.
Indeed, and with greater trust, we could see a new wave of institutional investment flowing in. This could be a transformative moment for the crypto market.
Institutional investment not only brings capital, but also legitimacy. It could reassure the average investor that crypto is here to stay.
And as long as regulators maintain a balance between oversight and fostering growth, I think we could see a healthy market emerge.
That's the ideal scenario, but it will require ongoing dialogue between regulators and the crypto community.
Absolutely, and that dialogue can only foster better understanding. Both sides need to feel validated in their perspectives.
Collaboration could lead to more effective regulations, ones that actually serve the needs of the industry while protecting consumers.
Exactly. It's about creating frameworks that support innovation without compromising security. It's a delicate balance.
Indeed. And I'm curious how upcoming regulations will specifically address issues like DeFi and NFTs. Those areas are still quite gray.
DeFi and NFTs present unique challenges, especially with their decentralized nature. Regulators will need to adapt traditional frameworks to these innovative models.
For sure. And I suspect that the first regulations we see in these areas will be more experimental, allowing for flexibility as things evolve.
That's a sensible approach. Flexibility will allow regulators to learn from early implementations and adjust as necessary.
It's almost like a live case study, where each adjustment could lead to more refined policies down the line.
Exactly, and that iterative process could prove beneficial for all stakeholders involved, helping to mitigate risks while promoting innovation.
And as these frameworks develop, it's essential for crypto projects to stay compliant. This could help in establishing a culture of responsibility.
A culture of responsibility could significantly enhance public perception of cryptocurrencies. It would help counter some of the negative stereotypes.
Definitely, and as more projects emphasize transparency and ethical practices, we could see a shift in public sentiment.
That shift in sentiment could lead to a broader acceptance of cryptocurrencies in daily transactions, which is ultimately the goal.
Yes, and it opens the door for integration into existing financial systems, which could facilitate easier access for everyone.
The integration of crypto into mainstream finance will be a game changer. It could redefine how we view money and transactions.
It's an exciting prospect, but it will also require significant changes in how financial institutions operate.
Absolutely. Financial institutions will need to embrace this technology rather than resist it, or they risk falling behind.
That's an important point, Chase. The pace of innovation in crypto doesn't seem to be slowing down anytime soon.
Indeed, and as we continue to progress, staying informed and adaptable will be paramount for all participants in the ecosystem.
For sure. And I believe informing the audience is just as important as the developments themselves. Contextualizing these changes helps.
Well said, Sabrina. Context can make all the difference in understanding the implications of regulatory moves.
And as regulations evolve, we should expect to see more dialogue within the community regarding best practices and compliance.
Exactly. Sharing knowledge and experiences will foster a more resilient crypto space, allowing it to withstand regulatory pressures.
That resilience is vital, especially in an environment where change is constant. The ability to adapt could dictate the survival of many projects.
Survival of the fittest, indeed. Projects that embrace compliance while innovating will likely emerge as leaders in the market.
And as we continue to see these shifts in the regulatory landscape, it's essential to keep monitoring how projects respond.
Monitoring is key. It can provide valuable insights into which strategies are effective and which aren't.
Yes, and those insights can inform future investments, helping investors make better decisions in a complex market.
Better decision-making leads to healthier market dynamics. Ultimately, we want a space where innovation thrives alongside responsibility.
Exactly. It's about striking that delicate balance, and discussions like this are crucial in navigating that path.
I couldn't agree more. Engaging conversations like ours today will help pave the way for a more robust future in crypto.
I look forward to continuing this dialogue as the landscape evolves. Chase, it's a thrilling time for the industry.
Absolutely, Sabrina. I appreciate the depth of our discussions and can't wait to see where the next conversation takes us. As we observe these regulatory movements, it's clear that not all countries are adopting the same approach. Some nations are leaning towards increased transparency and clearer guidelines, while others are still hesitant and cautious. This inconsistency can lead to market volatility as investors respond to differing regulatory signals.
Right, and this volatility can create challenges for institutional investors who seek more stable environments. They're often waiting for a clearer regulatory framework to feel secure in making larger commitments. Without that, we may see a lag in widespread institutional adoption.
That's a valid point. Institutional players are essential for long-term stability and growth in the crypto space. Their participation is dependent on regulatory clarity, which will ultimately provide the legitimacy the market needs.
Exactly. Additionally, the introduction of crypto ETFs has stirred a lot of discussion. While they're a step forward, approval processes differ significantly across jurisdictions, making it a complex landscape for potential investors.
True, and the differing approval timelines can cause frustration among investors. Each region's regulatory entity has its own set of criteria, which can delay market entry for some products. This inconsistency can hinder global investment strategies.
It does create a patchwork of regulations that can be confusing. Investors need to stay informed about the nuances in different markets. That complexity might deter some from entering the space altogether.
Certainly, and this is where educational initiatives become vital. As the regulatory environment shifts, educating investors on navigating these changes can empower them to make informed decisions. Knowledge is key to unlocking potential opportunities.
Agreed, and with education comes the responsibility of ensuring that information is accurate and unbiased. Misinformation can lead to poor investment choices, especially in a market as volatile as crypto. Transparency should be a priority for all stakeholders.
Absolutely. Transparency builds trust, which is crucial for fostering a healthier market environment. In a way, the push for regulation can also be seen as a move towards greater transparency, forcing players to adhere to higher standards.
That's a great perspective. However, there are fears that too much regulation can stifle innovation. Finding the sweet spot between regulation and freedom to innovate is vital for the industry's growth.
Yes, and we've seen examples of markets that over-regulate, creating barriers to entry that stifle innovation. The challenge is ensuring that regulations are designed to protect consumers without hindering the entrepreneurial spirit that drives crypto.
Exactly. And the nature of crypto is that it thrives on decentralization and agility. Regulations that are too rigid can push developers to other jurisdictions, undermining the very markets they're trying to regulate.
That can lead to a brain drain effect, where talent and innovation flow away from heavily regulated areas. Keeping an open dialogue between regulators and industry leaders could help bridge this gap.
Absolutely. And stakeholder engagement is crucial. Regulators need to understand the technology and its potential, while the industry must appreciate the reasons for regulation. It's a two-way street.
Indeed, this engagement can lead to more informed regulations that benefit both parties. Collaborative approaches like regulatory sandboxes can encourage innovation while keeping consumer protection in mind.
That's a promising concept. It allows for real-world testing of regulatory frameworks without stifling innovation. If executed well, it could set a precedent for future regulatory processes.
Absolutely, and it also allows for feedback loops where both regulators and the crypto community can learn from experiences. This can pave the way for regulations that evolve with the industry.
And speaking of evolution, we also need to consider how cross-border transactions will be regulated. The digital nature of crypto makes it inherently global, yet regulatory approaches vary by country.
That's a significant challenge. The lack of harmonization can create complications for users and businesses alike, particularly those operating internationally. Coordinated efforts between regulators can help create a more seamless experience.
Right, and some countries are starting to collaborate on regulatory frameworks, which is a positive sign. However, there's still much work to be done to ensure that all jurisdictions are on the same page.
Agreed, and as more countries begin to recognize the value of cryptocurrencies, we'll likely see a push for greater alignment. The hope is that this will lead to a regulatory environment that's conducive to innovation and investment.
Yes, but we must remain vigilant about the potential pitfalls. Regulations that are too strict can lead to an underground economy where crypto is used outside of legal boundaries.
That's a valid concern, and it underscores the importance of thoughtful regulation that addresses risks without pushing the industry underground. Consumer education also plays a key role in combating illicit activities.
Definitely. Educating the public about the legitimate uses of crypto can help dispel myths and create a more informed user base. This, in turn, can foster a more positive approach to regulation.
Exactly, and the narrative around crypto needs to shift from one of skepticism to one of understanding and appreciation. Positive stories of innovation and success can help reshape perceptions.
While storytelling in the crypto space is crucial, as more success stories emerge, the narrative can evolve, making it easier for regulators to see the value that this technology brings.
Absolutely, and as regulators become more familiar with the benefits of crypto, they may be more inclined to implement supportive policies. This ongoing dialogue is essential for progress.
Indeed, we're in a period where both regulators and the crypto community must work together to address challenges. Building trust is key to fostering a healthy relationship.
And it's a two-way relationship. While regulators need to respect the innovative spirit of crypto, the crypto community must acknowledge the importance of regulations for protecting users.
Exactly. If we can achieve mutual understanding, it could lead to a regulatory landscape that supports growth while ensuring safety. A win-win for everyone involved.
Well, that's the hope. And as we continue to witness developments in crypto regulations, staying informed and engaged will be essential for all stakeholders. We have to remain proactive instead of reactive.
For sure. The dynamic nature of this landscape demands that we keep our fingers on the pulse. Constantly evolving discussions will help us grasp the implications of new regulations as they arise.
Exactly, and our ongoing conversations like this one are crucial for making sense of these complexities. By sharing insights, we contribute to a more informed community.
Absolutely. And as the regulatory landscape unfolds, it will be a fascinating journey to watch. I'm excited to see how both sides will adapt to create a balanced crypto environment.
Definitely. I'll be looking forward to our future discussions as we delve into the new developments. There's so much potential waiting to be unlocked.
Indeed, Chase, the potential is immense, and staying ahead of the curve will be crucial. This is truly a pivotal moment for the cryptocurrency industry.
Absolutely, and engaging in these dialogues will help us all navigate these waters more effectively. It's an exciting time, and the future of crypto could be transformative.
And with that, let's keep the conversation alive. Each discussion will build on the last, creating a rich tapestry of understanding that will benefit everyone.
Well said, Sabrina. Thank you for this enlightening discussion today. I look forward to exploring more of these crucial topics together.
The pleasure is mine, Chase. I always appreciate our back and forth, and I'm excited for what lies ahead in the world of cryptocurrency.
Likewise, until next time, let's continue to keep an eye on those key regulatory developments and their effects on the market.
Absolutely, Chase. Until we chat again, let's hope for a future where regulation and innovation walk hand in hand.
Indeed. Take care, and I look forward to our next podcast.
You too, Chase. Let's keep the dialogues going.
So let's dive into the NFT market, which is indeed experiencing a mixed phase right now. We've seen a resurgence in certain launches and collaborations, yet the overall atmosphere feels tempered as collectors are holding back.
Absolutely, Chase. The cautious sentiment among collectors is palpable, especially when we examine the declining trading volumes across multiple collections. It's almost as if there's a collective pause for breath before diving back in.
Exactly, Sabrina. The excitement around new platforms and upgrades is being overshadowed by a sense of uncertainty regarding regulatory scrutiny and market stability.
And with the shift towards utility-oriented NFTs, it raises questions about long-term value versus speculative hype. It seems like the market is beginning to differentiate between what's sustainable and what's merely fashionable.
That's an important point. Utility NFTs can provide real-world applications, which might be the direction we need to look at for long-term investment decisions.
Definitely, it suggests a maturation of the market, but the challenge remains: how do collectors discern which projects hold intrinsic value versus those that are fads?
Well, due diligence is essential. Analysts and collectors alike must evaluate the fundamentals of each project, such as the team behind it and its practical applications.
Right, and this cautious approach might be why many in the space are advocating for selective exposure rather than a scattershot investment strategy.
Spot on. It's about being strategic, especially with the overhead of potential legal challenges looming in the background.
Those legal ramifications can certainly deter new investors. If anything, it highlights the need for transparency and accountability in the NFT space.
Absolutely, Sabrina. Transparency builds trust among collectors, and without it, the market risks losing more than just participants.
Exactly. The vibe seems to suggest that while there's hope for reignition, caution is the name of the game right now.
Yes, and while some collections may see a surge, the overall market needs to stabilize before we can confidently declare a booming phase.
And the shift in collecting behavior also reflects a growing understanding of value, shifting from pure speculation to tangible benefits.
That's a significant transition indeed. True collectors are now considering factors like community engagement and project longevity.
Community dynamics can drastically influence the success of an NFT project. A supportive community often translates into resilience.
Well said. Communities that foster collaboration rather than competition can prove invaluable. It's all about building a shared vision.
Exactly. And that shared vision might just be what propels the market out of this consolidation phase.
Yes, but we still need to proceed with caution, as the market remains sensitive to external pressures.
Like economic fluctuations or shifts in investor sentiment, everything seems interconnected these days.
Precisely, and the interplay between traditional finance and crypto will play a pivotal role in shaping the future of NFTs.
And as the narrative around NFTs continues to evolve, it's crucial for investors to stay informed and adaptable.
Well, education is key. The more informed the community, the better equipped they are to navigate these changing tides.
And it's interesting to see how artists are also adapting, using NFTs not just for profit, but as a means of expression and connection.
Absolutely. Artists have a unique opportunity to redefine ownership and value in the digital age through NFTs.
Yes, and those who leverage their creativity alongside solid business strategies will likely stand out in this evolving landscape.
Exactly. And as we look forward, those who can blend artistry with practicality will thrive.
But it also begs the question of what happens to those projects that don't adapt.
Well, they may fall by the wayside, but it's the broader implications on the perception of NFTs that worry me.
Indeed, if several high-profile projects fail, it could tarnish the entire market's reputation and deter new entrants.
That's where the role of thought leaders and analysts becomes crucial. They can help guide conversations and steer the community.
Exactly. And understanding these dynamics is vital for anyone considering entering the NFT space right now.
And it's not just about the hype, it's about fostering a culture of critical thinking around investments.
Yes, and as caution prevails, perhaps we'll see a more sustainable growth in the long run.
Well, that's the hope. Sustainability will be the cornerstone for the next wave of innovation in NFTs.
And in that sustainable model, we might see less volatility and a more stable market for collectors.
Absolutely, but until then, the current mixed sentiment suggests that education and strategic planning are crucial.
And it's those that can balance risk and opportunity who will ultimately come out ahead.
Precisely, as we witness the NFT landscape evolve, adaptability will truly be the name of the game.
And it's exciting to think about how this will influence not just NFTs, but the entire digital economy moving forward.
Exactly, NFTs are just one piece of a larger puzzle, and their evolution could reshape many aspects of digital ownership.
And they hold the potential to redefine what it means to possess something in the digital realm.
Further, as regulatory frameworks emerge, we might find a clearer path for mainstream adoption.
But those regulations must strike a balance, ensuring innovation isn't stifled while protecting consumers.
True, a nuanced approach will be critical to fostering a healthy environment for both creators and collectors.
And as we continue to analyze these trends, it's essential to keep an open dialogue about the future of NFTs.
Absolutely. Ongoing discussions can help demystify the complexities of the NFT marketplace.
And that's where platforms play a role too. They must facilitate not just transactions, but also community engagement and education.
Certainly, a well-informed community will be more resilient and better positioned to navigate future challenges.
This is a fascinating time for NFTs, and it's going to be interesting to see how the landscape evolves.
Yes, whether we witness a resurgence or a period of adjustment, keeping a pulse on the market will be key.
Well, let's keep exploring these trends as they develop. The NFT narrative is still being written.
Indeed, and as we engage with our audience, we can share insights that help them make informed decisions.
Exactly, and that connection between us and our listeners can foster a more engaged NFT community.
Well, here's to navigating this mixed phase with optimism and strategic foresight.
Cheers to that, Chase. Let's keep the conversation going and help our audiences understand the nuances.
Absolutely, I look forward to delving into more details as the NFT market progresses.
And I'll be keeping an eye on regulatory developments and their implications for future trends.
Well, it's interesting to see how communities are reacting to market fluctuations. There seems to be a growing awareness among collectors about the importance of quality over sheer volume.
Right, and that shift towards a more discerning approach could stabilize the market in the long run. However, I'm curious about how artists will adapt to these changes.
Indeed, artists need to be inventive and align their work with market trends. Collaborations that emphasize utility could prove to be a game changer.
Absolutely, and we've seen some artists successfully incorporate real-world benefits into their NFTs. This could attract a different demographic of buyers.
Yes, and that demographic shift might lead to a more sustainable market model. It's all about creating lasting value rather than fleeting hype.
That makes sense. With the legal scrutiny out there, artists and collectors alike should be cautious about the projects they support.
For sure, regulatory compliance is becoming a crucial factor. Projects that fail to address these issues may struggle to retain trust.
And trust is everything in this space. It can take years to build a reputation, but only moments to destroy it.
Exactly, and that's why transparency is vital. Projects that openly communicate their intentions and processes are likely to fare better.
Communication isn't just a buzzword, it's a lifeline for fostering community engagement. How do you see platforms evolving in this respect?
Platforms will need to enhance user experience and integrate educational resources. A knowledgeable user base is essential for a robust market.
You're spot on. Education can empower collectors to make informed choices, potentially alleviating some market fears.
Indeed, and that empowerment often leads to more active participation. An engaged community is a resilient one.
But what about the current trading volume? Do you think we can interpret that as a sign of market fatigue?
Yes and no. While lower volume can hint at fatigue, it might also signal a maturation phase where participants are more selective.
That's a nuanced perspective. Selectivity can definitely lead to a stronger market foundation, though it may feel sluggish at the moment.
Absolutely, and as we witness more innovative projects enter the space, I believe enthusiasm will gradually return.
Innovation is key, and it often ignites interest. It will be fascinating to see how upcoming artist collaborations play out.
Yes, those collaborations can create unique narratives that resonate with collectors. Storytelling will play a huge role.
Exactly. Storytelling adds emotional value to NFTs. When collectors feel connected, they're more likely to invest.
Right, and that emotional connection differentiates a successful project from the countless others that fail.
And amidst this crowded space, those who can effectively communicate their stories will capture attention.
That's a great point. With so many projects emerging, clarity and consistency in messaging will be paramount.
Definitely, it's like a beacon in the storm. It guides collectors toward the projects that resonate with their values.
Well, I think this is where influencer partnerships come into play. They can amplify messages and enhance visibility.
Influencers can sway opinions significantly, but there's a responsibility that comes with that power. Authenticity is key.
Agreed. If influencers promote projects solely for financial gain, it can backfire and erode trust.
Ultimately, it's about fostering a culture of accountability. The community should call out inauthentic practices.
Absolutely, and I think we're starting to see that happen more frequently. The community is becoming increasingly vocal.
A vocal community is an empowered one. They can help shape the narrative surrounding successful and sustainable projects.
Exactly, and it's this collective effort that can lead to long-term growth in the NFT ecosystem.
And as we continue to cover this space, it's crucial to highlight these instances of positive community involvement.
Indeed, we should celebrate the projects that prioritize value, transparency, and community engagement.
Well, keeping those projects in the spotlight can inspire others to follow suit, don't you think?
Absolutely. When success stories are shared, they become benchmarks for aspiring creators and investors.
And benchmarks are vital for growth. They provide realistic targets to strive for in this evolving landscape.
Right, and as we approach a potential reignition phase, monitoring these benchmarks will be essential for investors.
And they should also be aware of potential pitfalls. Each opportunity comes with risks that need to be managed.
Indeed, due diligence is non-negotiable. Investors must navigate these waters with a discerning mindset.
Well put, in a space that's constantly changing, adapting to new information is key for both artists and collectors.
Absolutely. This adaptability will determine which entities survive and thrive in the competitive NFT market.
And as we're seeing with regulatory scrutiny, compliance will also play a critical role in future success.
Exactly. Regulatory frameworks will inevitably shape the landscape, so staying informed is essential.
A proactive approach will allow projects to pivot effectively in response to new legal expectations.
Yes, and those that take initiative will likely attract more discerning investors who appreciate that foresight.
It's a balancing act for sure, but those that manage to find that balance will lead the way in this evolving market.
Definitely. I'm excited to see how this landscape unfolds and which projects will rise to prominence.
As am I. Our listeners will benefit greatly from our analysis of these emerging trends and their impact.
Absolutely, and it's our responsibility to provide them with the insights they need to navigate this space.
Together, we can help demystify the complexities and provide clarity on what to watch for moving forward.
Well said, Sabrina. Sharing our knowledge empowers our audience to make sound investments.
And that empowerment could lead to a more vibrant and sustainable NFT community in the long run.
Indeed, a vibrant community thrives on collaboration and shared learning. That's the future of NFTs.
A future we can all contribute to, one insightful discussion at a time.
Well, I'm looking forward to more discussions like this. They not only educate, but also inspire.
And inspire we must. The NFT market is full of potential, but it requires an informed approach to unlock it.
Exactly. So as we wrap up this segment, let's remind our listeners to stay curious and vigilant.
Absolutely. Curiosity drives innovation, and vigilance protects investments in this dynamic landscape.
Well, thanks for an engaging discussion, Sabrina. I look forward to diving deeper in future episodes.
Thank you, Chase. It's always a pleasure to explore these themes with you.
It's interesting to see how utility-focused NFTs are gaining traction. Rather than just being digital collectibles, these tokens are being designed to offer real-world benefits, which could change how we perceive value in this space.
Definitely, and that shift could lead to a more stable market. If collectors can see tangible use cases for their investments, it might mitigate some of the volatility we've been experiencing.
Exactly. And with the rise of community-driven projects, we're seeing a blend of art and utility. This could potentially redefine how artists approach their work and how collectors engage with those projects.
True, but it's also crucial to consider the risks involved. Many new projects may not sustain their initial hype, leading to losses for those who jump in without thorough research.
Right, and regulatory scrutiny is another factor to keep on the radar. As more governments start to understand and impose regulations, some projects could either flourish under clearer guidelines or struggle to adapt.
Absolutely. And given the legal complexities, it's important for both creators and collectors to stay informed about compliance issues. This knowledge can be a key differentiator in their decision-making.
Plus, the recent declines in trading volume signal a cautionary approach from collectors. It's almost as if the market is pausing to reassess what true value entails.
For sure. And that reassessment could lead to long-term sustainability. Investors might start focusing on quality over quantity, which could benefit established artists and projects.
Indeed, and we may also see a consolidation in the marketplace. Those platforms that can deliver a solid user experience and clear value propositions will likely emerge as leaders.
That's a good point. The NFT platforms need to adapt and innovate continuously, especially as competition grows. Only the strongest will thrive in such a dynamic environment.
And with artists collaborating across different platforms, we could witness a fusion of styles and concepts. This could expand the creative horizons of the NFT community.
Collaboration can indeed spark innovation. But we should also consider the impact of market saturation. Too many projects without differentiation can dilute interest.
Great observation. The key will be finding that balance between quantity and quality. Unique projects with compelling narratives will likely captivate an audience.
Yes, and as analysts, we must encourage our audiences to dig deeper into backstories and the values behind NFT projects. This adds another layer of engagement.
Also, as the market evolves, so do the collector demographics. We're seeing younger generations stepping into this space, often with different values than older collectors.
The generational shift is fascinating. Younger collectors tend to prioritize community and social impact, which may further influence how NFTs are created and marketed.
Absolutely, and as the technology behind NFTs matures, it opens doors for more sophisticated applications. Think about how smart contracts can facilitate new types of ownership.
Exactly. Smart contracts can transform the buying and selling process, creating more secure transactions. This could also enhance trust within the NFT ecosystem.
Trust is essential, especially as we've seen scams and fraudulent activities increase. Platforms that prioritize security will ultimately earn the loyalty of users.
True, but transparency also plays a crucial role. Projects that clearly communicate their intentions and roadmaps can build a stronger connection with their audiences.
Well said. Transparency not only fosters trust, but also empowers collectors to make informed decisions. They can then support projects that align with their values.
And that alignment can lead to more engaged communities. Collectors often want to feel part of something bigger than just a financial investment.
Right, belonging to a community can significantly enhance the perceived value of an NFT. This social aspect could be a game changer moving forward.
It certainly adds an emotional layer to the market. As we explore these dynamics, it's vital to keep track of community sentiment and how it affects market movements.
Sentiment analysis tools could become invaluable in this context. Understanding mood shifts may help investors anticipate market trends more effectively.
Absolutely, and those tools should evolve to become more sophisticated. Data-driven insights can lead to more informed strategies in navigating the NFT landscape.
At the same time, traditional financial principles may still apply. Diversifying one's NFT portfolio could mitigate risks and enhance potential returns.
Right, but diversification in NFTs requires careful consideration. Not all NFTs hold the same potential for growth or stability.
Exactly. It's about finding the right balance. Emerging artists with promising futures could provide both risk and reward, but thorough research is essential.
That diligent research can also uncover hidden gems. Many under-the-radar projects could surprise collectors who take the time to investigate.
And as more artists embrace NFT technology, we may witness an expansion of genres and styles. This evolution could attract broader audiences.
Yes, and with that growth, educational resources will become vital for newcomers. Providing guidance on how to navigate this complex environment is essential.
Educational initiatives can empower collectors and creators alike. A more informed community stands to benefit everyone involved in the NFT ecosystem.
For sure. And as journalists, it's our responsibility to shed light on these developments. We need to help demystify the NFT space for our audience.
Absolutely, and addressing misconceptions can lead to healthier discussions. An educated public is less likely to fall prey to hype-driven decisions.
Well put, this transparency can also lead to a more resilient market. When people understand what they're buying, they make more thoughtful decisions.
Exactly, and cultivating a culture of informed collectors could make the NFT market less speculative. This maturity could benefit everyone in the long run.
Moreover, as creators are rewarded for genuine engagement rather than mere hype, we could see a rise in quality content in the marketplace.
That's a compelling vision for the future, Sabrina. As the market matures, we all have a role in shaping what it becomes through our engagement and choices.
Yes, and with continued innovation comes the challenge of keeping pace. Creators and collectors alike must stay adaptable to thrive in this evolving landscape.
Adapting requires not only awareness, but also a willingness to experiment. Some of the most successful players are those who embrace change.
Absolutely, and we're likely to see a blend of established practices with new technologies. This fusion can inspire groundbreaking concepts in the NFT space.
Innovation will also demand collaboration across sectors, from tech to art to finance. Each perspective adds value and richness to the NFT narrative.
That cross-disciplinary approach could lead to unexpected synergies. It's exciting to think about the next wave of creativity that could emerge.
Indeed it is. As we wrap up today's discussion, I'm curious about what you'll be looking out for in the NFT space moving forward.
I'm particularly interested in how regulatory frameworks evolve. Understanding how laws will shape the market will be crucial for all stakeholders.
That's a great focus. Compliance will likely separate the sustainable projects from those that might not withstand scrutiny long term.
Precisely, and I'll be monitoring emerging trends in utility-based NFTs as well. These could redefine collector engagement in fascinating ways.
Excellent. And I'll be keeping an eye on how community dynamics shift as new artists enter the scene. Their fresh perspectives can invigorate the market.
We have a lot to look forward to, don't we? Despite the current challenges, I'm optimistic about the potential for growth and innovation.
Absolutely, Sabrina. With informed collectors and innovative creators, the NFT market could indeed find its footing and thrive in the future.
Well, I think that wraps up our conversation for today. Thank you for the insights, Chase, as always.
The shift towards utility-oriented NFTs signifies a maturation of the market, which can actually be quite positive in the long run. Artists are understanding that merely creating art isn't enough. They need to provide value to their collectors. This could lead to more sustainable projects and a healthier ecosystem.
It's interesting to see how artists are now more focused on engagement rather than just selling digital art. This may create a more loyal community of collectors who are interested in the long-term success of their investments. It's a fascinating evolution.
I agree, Sabrina. We're moving away from the flipping culture that dominated the early days of NFTs. The relationships between creators and collectors are becoming more nuanced, which could stabilize the market.
Exactly. And with that stability, we might see new entrants who are genuinely passionate about the art and not just the investment potential. This could lead to a more vibrant and diverse creative landscape. It's refreshing.
Absolutely. However, we can't ignore the fact that regulatory scrutiny could create additional hurdles. While it might weed out bad actors, it could also stifle some innovation if not handled carefully.
Right, and I've noticed that many creators are concerned about compliance issues, which can be a deterrent for them to fully embrace the NFT space. The balance between regulation and creativity is delicate, and we'll need to watch how this unfolds.
It's a tightrope walk for sure. The last thing we want is an overly stringent framework that restricts creativity. Instead, we should encourage policies that protect buyers and creators, but also allow for experimentation.
Exactly. Policies should aim to foster innovation while providing a safety net for investors. It's a tricky balance, but it's essential for the long-term health of the market.
Moreover, as more platforms begin to offer advanced functionalities like fractional ownership or royalties for secondary sales, it could further engage collectors and encourage them to hold on to their NFTs longer.
Oh, totally. Those features can enhance the perceived value of NFTs and make them more appealing to a broader audience. If people see genuine utility, they're more likely to participate.
And let's not forget the importance of storytelling in this context. NFTs that come with a compelling narrative can foster deeper emotional connections. This could elevate their desirability.
Absolutely, storytelling can turn a simple digital file into an experience. It engenders a sense of belonging among collectors, making them more invested in the success of the project.
Precisely. Emotional engagement can lead to more resilient markets. If collectors are genuinely passionate about the stories behind their NFTs, they're less likely to panic sell during downturns.
That's a great point. The emotional component in NFTs is often overlooked, but can prove crucial in maintaining market stability. It adds a layer of depth that pure speculation lacks.
Also, the recent surge in artist collaborations is significant. Cross-genre collaborations can introduce fresh aesthetics and appeal to different demographics. It's a way to tap into multiple fan bases.
Yes, artists from varied backgrounds merging their styles can lead to groundbreaking works. This not only diversifies offerings, but also expands the audience for NFTs.
However, with every collaborative effort, the risk of diluting individual brands could arise. Artists should be mindful to keep their unique voices while collaborating.
That's a valid concern, Chase. Brand identity is important for artists, and they must navigate partnerships carefully to ensure they don't lose their essence while exploring new avenues.
Indeed. Furthermore, as we see the rise of metaverse platforms integrating NFTs, the intersection of virtual social experiences and digital ownership could redefine how we interact with art.
That's a thrilling prospect. The metaverse can create immersive environments for collectors to experience art in a way we've never seen before. It might even lead to new forms of engagement.
And that will likely accelerate the adoption of NFTs among those who may not be traditional art collectors. It's about expanding the definition of what art can mean in the digital age.
Exactly. It encourages inclusivity and could introduce a broader audience to the art world, thus enhancing the overall perception and value of NFTs.
On a different note, the decline in trading volume for many collections does indicate a maturation phase, but it also raises questions about sustainability. Are these collections built to last?
You bring up a crucial point. Collections that rely purely on hype might not sustain interest over time. We need more projects focused on long-term value and community-driven initiatives.
Exactly. The strongest projects are going to be those that resonate with their audience and can adapt to changes in the market landscape. This adaptability could determine survival.
I completely agree. It's about evolving with the market rather than clinging to trends. Creators who can anticipate shifts will set themselves apart.
And speaking of trends, the rise of generative art NFTs is another fascinating area. They democratize art creation while also raising questions about authorship and originality.
That's a multifaceted issue. Generative art challenges our traditional notions of what it means to be an artist. It opens up discussions on creativity in the digital realm.
Right, and as we navigate these questions, we must also be cautious of the environmental impact of minting processes. Sustainability is becoming a key concern among collectors.
Absolutely. Eco-conscious collectors are becoming more prevalent. Projects that address these concerns stand to gain a significant competitive edge. Transparency is key.
Indeed, projects that showcase their commitment to sustainability can resonate deeply with a community that values ethical considerations in their investments.
Well, this is all a reminder that the NFT market is much more complex than it seems at first glance. We must look beyond just prices and trends to understand what drives value.
Totally, Sabrina. Understanding the cultural, economic, and ethical dimensions of NFTs provides a richer perspective. It allows us to engage thoughtfully with this evolving landscape.
And that engagement is crucial, as it encourages a more informed collector base. Informed buyers can differentiate between projects built for speculation and those with genuine value.
Exactly. The more we can educate ourselves and others, the healthier the market will be. Knowledge sharing is a vital part of building a sustainable community.
Well, that's a fantastic note to end on. Education and community are the twin pillars that can support the NFT market's evolution. Thank you for another enlightening discussion, Chase.
Thank you, Sabrina. I always appreciate our dialogues. Looking forward to our next conversation as these trends continue to unfold.
Me too. Until next time, let's keep an eye on these developments and see where they lead.
For sure, let's continue to explore and share insights to help others navigate this fascinating landscape.
Absolutely. The more perspectives we gather, the clearer the picture becomes.
And that's vital in an environment that can feel overwhelming. Simplifying complex topics makes engagement easier for everyone.
Exactly. We need to make it accessible so anyone can join the conversation, not just the tech-savvy.
True, NFT literacy is essential for broadening the base of collectors and participants.
And with more participants comes a richer marketplace, fostering innovation and creativity.
Right. It can also inspire creators to push boundaries further, knowing there's a diverse audience willing to engage.
That's the beauty of a thriving community. It fosters collaboration and encourages experimentation.
Indeed, as we move forward, this spirit of collaboration could be what reinvigorates the market.
Absolutely. It will be exciting to see how new ideas manifest in the NFT realm in the coming months.
The possibilities are endless. With artists and creators evolving in unique ways, we're bound to witness some groundbreaking work.
And let's not forget the new technologies that continue to emerge. They could dramatically change how we view and interact with NFTs.
Exactly, emerging technologies can enhance the user experience, making NFTs more accessible and engaging.
Yes, the integration of augmented and virtual reality could provide immersive experiences we can hardly imagine right now.
Absolutely. The deeper the connection we form with these digital assets, the more value they can hold.
It'll be fascinating to see how these technological advancements will reshape the landscape of digital ownership.
Indeed, we're just scratching the surface of what's possible with NFTs and digital art.
And it's our role as observers and analysts to stay engaged and informed. It's an evolving narrative.
For sure, we need to keep the dialogue open and encourage others to join us in exploring this fascinating field.
Absolutely, engaging with different viewpoints enriches our understanding and appreciation of the NFT space.
I think we're at a pivotal moment where the market is recalibrating. Investors are becoming more discerning, focusing on quality over quantity as we witness a shift towards utility-based NFTs.
That's interesting, Chase. It seems that the initial frenzy of speculative investments is being replaced by a more mature approach. Do you think this could stabilize the market in the long run?
Potentially, yes. A focus on utility could lead to more sustainable growth, as NFTs provide tangible benefits to their holders. This could also attract a different demographic of buyers.
It's almost like the market is weeding out the less viable projects. However, with ongoing regulatory scrutiny, how much do you think that will influence new creators entering the space?
Regulatory scrutiny can serve as both a challenge and an opportunity. While it may deter some newcomers, it can also legitimize the space and encourage compliance, leading to healthier developments over time.
That's a fair point. It could also push creators to be more innovative in how they present their NFTs and engage their audiences. Do you see any particular trends emerging from this?
Definitely, we're observing trends like fractional ownership and co-creation models gaining traction. These innovations promote community involvement and could redefine what ownership means in the NFT space.
Fractional ownership does seem to lower the barrier to entry for collectors, but do you think it risks diluting the value of individual pieces?
It could, but it also democratizes access to high-value assets. The value may not just rely on the piece itself, but the community and experiences built around it.
That makes sense. Speaking of communities, how critical do you think social media platforms are in influencing NFT collections' popularity?
Social media is crucial. It's where creators and collectors cultivate their narratives. Platforms provide a space for interaction and visibility, which can catapult lesser-known projects into the spotlight.
So, it acts almost like a digital word-of-mouth marketing? But how do you think this affects the traditional art world?
Exactly, it's a modern twist on promotion. Traditional art spaces might become more open to collaborations with digital artists as they see the potential for cross-platform engagement.
That's a fascinating perspective. But do you feel that the traditional gatekeepers of art will fully embrace NFTs? Or will there be resistance?
Resistance is likely as change often meets skepticism. However, as more established artists delve into NFTs, acceptance will grow and we may see a blending of worlds.
And this blending could open up more opportunities for emerging artists, right? They could leverage both traditional and digital platforms.
Exactly. Emerging artists could gain exposure in more diverse markets, thus expanding their reach exponentially. This convergence is what excites me the most about the future.
This future you talk about sounds like a playground for creativity. But how can collectors navigate this mixed and uncertain landscape?
Collectors need to prioritize research and due diligence. Understanding the narratives and value propositions behind collections will give them a clearer view of what to invest in.
Right. Just jumping into the latest trend could lead to losses. How important do you think community engagement is during this research phase?
Community engagement is vital. It often reflects the health and longevity of a project. Active communities can provide insights that aren't immediately apparent in the surface-level data.
So, it's not just about the numbers and trading volume. The pulse of the community gives a deeper understanding of the NFT market's dynamics.
Absolutely, a vibrant community can indicate strong demand and potential for growth, while a stagnant one usually signals trouble ahead.
That's a valuable insight. Shifting gears a bit, how do environmental concerns surrounding NFTs affect market perception?
Environmental concerns have put pressure on the industry to adopt greener practices. Projects that prioritize sustainability will likely generate positive sentiment and could attract eco-conscious buyers.
Sustainability is definitely becoming a hot topic. It seems that the NFT space has to balance innovation with responsibility.
Exactly. Innovators will need to be proactive in addressing these concerns. The future could hinge on finding eco-friendly solutions that don't compromise on creativity.
This creates a unique challenge for artists and developers alike, doesn't it? Balancing creativity, market demand, and environmental impact is a tall order.
It is. However, challenges often breed creativity. I anticipate that we'll see unique art forms and expressions emerging from these constraints.
That's a hopeful perspective. It could lead to an innovative renaissance within the NFT space.
I believe so. And beyond art, utility-focused NFTs could also drive innovation in various industries, potentially shifting traditional structures.
Such as,
Well, think of real estate, ticketing, or even supply chain management. NFTs could help track ownership and provenance in ways that current systems struggle with.
that's fascinating. It would give buyers more confidence in their purchases and open up new revenue streams for businesses.
Exactly. The versatility of NFTs lends itself to multiple applications, making them more than just a trend. They could fundamentally change operations in many sectors.
And as those sectors adopt NFTs, do you think the artist community might feel threatened by this shift?
It's possible. However, I think it can create a symbiotic relationship where artists find new platforms for their work and unique revenue opportunities beyond traditional galleries.
That's a strong point. Artists could redefine their roles within the ecosystem rather than being sidelined by technological advances.
Indeed, this evolution could foster greater collaboration between artists, technologists, and business leaders, leading to a more enriched ecosystem.
There's so much potential for cross-pollination of ideas. I'm curious, do you see any red flags or warning signs in the current market that collectors should be aware of?
One major red flag is the tendency for some projects to rely on hype without a solid foundation. If the utility and community aren't there, it could lead to sharp declines.
That's a classic warning sign. It's often easy to get swept up in the excitement, but prudent collectors need to remain skeptical.
For sure, collectors should also look for teams behind the projects. Transparency and track records can be good indicators of a project's future viability.
So that old adage about investing in people still holds true, even in the NFT realm?
100%. Understanding who is behind a project often gives insight into its potential success or failure. It's not just about the art.
That's a valuable takeaway for our listeners. As the market continues to evolve, vigilance and education are key.
Exactly. As we explore this dynamic landscape, staying informed and adaptable will be crucial for both creators and collectors.
It seems like we're in for a thrilling ride in the NFT space. I can't wait to see how it unfolds.
Likewise, the next few months should be quite revealing as new projects emerge and the market finds its footing.
With that in mind, I think it's essential to communicate the importance of continuous learning in this field.
Absolutely. Engaging with communities and following trends can be invaluable for anyone looking to navigate the NFT space successfully.
And, as we've discussed, The landscape is constantly shifting. Keeping a pulse on these changes is crucial.
Exactly. The NFT market isn't static, it evolves with technology and consumer behavior, making it a constant learning experience. We should also consider the impact of community engagement on NFT values. Projects with a strong, active community tend to fare better, especially during uncertain times.
That's an important point. A supportive community can create a network effect that enhances the perceived value of an NFT, even if the broader market remains shaky.
Exactly. Additionally, transparency from creators about their projects can significantly build trust, which is something that collectors are increasingly seeking.
Transparency is key. With many scams and failed projects, buyers are more wary and look for clear communication and a roadmap.
You know, I've noticed that utility-driven NFTs are gaining traction. They're not just collectibles, they provide actual value to holders.
Right, utility can range from access to exclusive content to discounts on products. This multidimensional approach could anchor the market amidst volatility.
Moreover, integrating NFTs with existing platforms can enhance their usability, but this requires partnerships that can scale.
Partnerships are vital. Collaborations with established brands can lend credibility to projects and attract a wider audience.
It's also intriguing to see how art is becoming a central theme again, with digital artists finding their niches in this evolving landscape.
Absolutely. The emergence of various art styles and formats within the NFT space is fostering diversity, which could appeal to collectors with varied tastes.
Speaking of art, the concept of fractional ownership is fascinating. It allows more accessibility for collectors who might not have been able to afford high-value pieces.
Fractional ownership can democratize the market, but it also requires robust legal frameworks to ensure smooth transactions.
Yes, regulatory clarity is crucial. Without it, potential investors might remain hesitant, affecting overall market confidence.
It's a double-edged sword. While regulation can protect investors, it could also stifle creativity and innovation if overly restrictive.
True. There's a delicate balance there. The challenge will be crafting regulations that promote growth without hindering development.
Exactly. And this is where industry advocates come in, pushing for sensible regulations while educating both regulators and the public.
Educational content is essential. The more informed participants are, the better they can navigate risks and opportunities in the market.
And that could potentially lead to a more sustainable market. Knowledge is power, especially in this fast-paced environment.
Speaking of sustainability, the environmental impact of NFTs is still being discussed. Many are pushing for eco-friendly solutions.
Absolutely. As awareness grows, collectors are more likely to gravitate towards platforms that prioritize sustainability in their operations.
It's a good opportunity for projects that can demonstrate a commitment to sustainability. It'll likely influence buying decisions.
Potentially, yes. This element could soon become a significant differentiator among NFT platforms.
There's also the aspect of how the metaverse will impact NFTs. As virtual worlds expand, they may become integral to users' experiences.
For sure. The metaverse provides a canvas for NFTs that can elevate their utility by integrating them into virtual experiences.
And this integration can lead to new business models for creators and platforms alike. It's an exciting prospect.
However, it also raises questions about ownership and rights in virtual environments, which are still being defined.
Regulatory frameworks will need to evolve to address these emerging issues. It's something to keep an eye on moving forward.
Definitely, understanding these implications will be critical for anyone invested in the future of NFTs.
Moreover, we're likely to see more integration with traditional finance as well, as institutions explore ways to interact with NFT assets.
That could bridge a gap for many traditional investors who are still on the fence about dipping their toes into the NFT market.
Yes, and as traditional finance embraces digital assets, it might encourage more stability in the market.
Stability is crucial for long-term growth. Right now, the market feels like it's at a crossroads.
And it's during these phases that innovation often emerges. We could see exciting new projects that redefine the landscape.
Exactly. It's not uncommon for the most groundbreaking developments to arise right after a period of uncertainty.
Investors need to stay sharp, as spotting emerging trends will be vital for navigating this mixed phase.
That's true. The capability to pivot based on new developments will be a significant asset for both collectors and creators.
And as the technology evolves, the explanation of NFTs will need to become as sophisticated as the assets themselves.
Definitely, it's all about creating value, whether that's through art, experiences, or utility.
And ensuring that the community sees that value is what will ultimately drive demand. Engagement is key.
Right, the connection between creators and collectors can form the backbone of a thriving ecosystem.
On a broader scale, it also impacts the overall perception of digital ownership and rights.
True. And as people become more familiar with the concept of ownership in digital spaces, it could drive more interest in NFTs.
I believe we're on the cusp of a significant cultural shift. The NFT narrative is evolving, and it may become mainstream sooner than we think.
It's definitely an exciting time to be in this space. As professionals, we need to articulate these changes clearly.
As always, understanding the implications of these shifts is critical for effective communication and analysis.
Indeed, in a rapidly changing environment, being able to distill complex information into digestible insights is invaluable.
Absolutely. As the NFT market consolidates, we'll continue to see shifts in sentiment and strategy.
And adapting to these changes will ensure that we remain relevant and insightful sources of information.
Definitely. A proactive approach will serve both creators and collectors well as we navigate this evolving space.
To sum it up, staying informed and adaptable is paramount in this mixed phase of the NFT market.
Right. Careful evaluation and strategic engagement will be key to capitalizing on future opportunities.
As we continue to observe these developments, our insights will help guide others through the complexities of the NFT landscape.
Well said. It's an ongoing journey of learning, and we're all part of it together.
Absolutely. And that shared experience can foster a more robust community, benefiting everyone involved.
In conclusion, the NFT market is likely to continue evolving, and how we adapt will shape its future.
Indeed, it will be fascinating to see where this journey takes us in the coming months.
So let's dive into this cautious phase of the DeFi market. While innovation is definitely still buzzing, the recent uptick in security incidents has made many investors pause.
Absolutely, Chase. It seems like for every step forward in innovation, there's a corresponding risk that's been magnified, especially regarding exploit volumes.
Precisely, the risk indicators we're seeing, like governance weaknesses, are not just technical issues, they undermine user trust in these protocols.
Trust is crucial, especially in a space that thrives on decentralization. If users feel vulnerable, they might pull back from experimenting with new DeFi tools.
Exactly, and it's not just individual projects at risk. The entire ecosystem could suffer from a lack of confidence if these issues persist.
That makes sense. It's fascinating how regulatory scrutiny is also increasing, which can either stifle innovation or push projects towards better security.
Indeed, regulations can act as a double-edged sword. While they may bring more structure, they can also deter the very innovation that DeFi is built upon.
It's a delicate balance. What do you think are some of the essential measures that DeFi projects could implement to enhance security?
Well, first off, audits should be non-negotiable. A thorough, independent review can catch vulnerabilities before they become problems.
For sure. I know some projects are now opting for continuous audits, which seems like a smart move given the fast-paced nature of this market.
Absolutely. Continuous audits can help maintain security standards as code evolves, but they also require ongoing investment.
And with market conditions being cautious, securing funding for such measures can become a challenge for many projects.
True, it puts pressure on teams to prioritize short-term gains over long-term stability, which can be a risky strategy.
Yes, especially when we're seeing that the bedrock for large-scale growth hasn't stabilized yet. It's a tough crossroads.
Which makes it crucial for teams to identify their unique value propositions while also addressing security concerns proactively.
Right. So, do you think focusing on quality projects is the best approach for investors right now?
In this current climate, yes. Quality over quantity can help mitigate risks significantly and protect investor capital.
That's an important point. It seems like the era of just chasing yields might be coming to an end.
Very much so. Now investors are becoming more discerning, looking at project fundamentals rather than just potential returns.
It's interesting how that shift in mindset could reshape the DeFi landscape. Do you think it will lead to more sustainable growth?
I believe so. A focus on sustainability and security will likely encourage innovation that aligns more closely with user needs.
And that could foster a more robust community of users and developers, which is what DeFi really needs right now.
Community engagement is key. Encouraging user feedback can help projects adapt and grow while building trust.
I agree. Speaking of trust, How do you think the narrative around safety is affecting new entrants to the market?
New entrants might be feeling hesitant, especially when they see headlines about exploits. It's crucial for projects to actively communicate their security measures.
That's a good point. Transparency is vital in rebuilding that trust, especially for those who are new to the space.
Without a doubt, it's all about managing perceptions while demonstrating real-time security efforts.
And that links back to the idea of quality projects. Those that prioritize safety will stand out in this environment.
Right. Investors are looking for assurance that their assets are safe, which means projects need to deliver more than just innovative features.
So, what do you think are some of the top criteria that investors should be looking for in quality DeFi projects?
First, look for a solid team behind the project. Their experience and transparency can say a lot. Next, examine their security measures.
Right, and also the community engagement aspect. Projects engaging in active dialogue with their users tend to be more trustworthy.
Very true. It's also vital to consider their governance model. A decentralized and transparent governance structure is a good sign.
Yes, especially as we see increasing governance weaknesses across the board. Strong governance can lead to better decision-making.
Absolutely. And finally, the project's roadmap should be realistic yet ambitious, reflecting their long-term vision while being adaptable.
Well said, but how can investors differentiate genuine innovation from mere hype?
Good question. It often comes down to the substance behind the marketing. Deep dives into their tech and user reviews can reveal a lot.
So it's about peeling back the layers, right? Digging deeper than surface-level claims to find the real value.
Exactly. The crypto space can be noisy, but taking the time to research can yield valuable insights for investors.
And it's not just about finding the next big thing, it's about identifying projects that will still be around in the long term.
Totally. Long-term stability and potential should always be a priority for investors, especially in uncertain times.
So, as we look toward the future, do you think we'll see a consolidation within the DeFi space?
Consolidation seems likely as weaker projects either get acquired or fade away, which could streamline the ecosystem.
That could potentially lead to a stronger network of protocols that are more resilient and capable of withstanding scrutiny.
Definitely, the stronger players will likely emerge, taking the lessons learned from this cautious phase to drive innovation.
And those lessons are going to be crucial for the next wave of DeFi tools and protocols that come to market.
Absolutely. Adaptation and security have become the cornerstones for any DeFi project aiming for longevity.
Well, it seems like we've only scratched the surface of what the future holds for DeFi. There's a lot to consider.
Indeed, and as the landscape evolves, it will be interesting to see how teams respond to both challenges and opportunities.
I think it's safe to say that while the cautious phase presents hurdles, it also offers a chance for refinement and growth.
Absolutely. With a more cautious approach, we can hope for a more resilient DeFi environment in the future.
That's a hopeful perspective, Chase. I'm eager to see how this all unfolds in the coming months.
Me too, Sabrina. It's a pivotal time for the DeFi space, and I'm optimistic about what's to come. One key aspect to consider is the importance of security audits for DeFi projects. As the number of exploits rises, teams need to prioritize comprehensive audits and demonstrate transparency to build trust with users.
That makes sense, Chase. Security audits could serve as a badge of honor for projects, helping to differentiate quality protocols from those that might be more susceptible to risks.
Exactly, and we're seeing some projects invest heavily in this area. However, audits alone aren't a silver bullet. Teams also need to establish robust governance structures to handle potential vulnerabilities.
That brings up an interesting point about governance mechanisms. Weak governance can lead to poor decision-making, especially during crises. Have you seen any innovative models addressing this?
Yes, some projects are trialing decentralized autonomous organizations or DAOs to empower community governance. However, these structures can also face challenges, particularly when dealing with large-scale decisions.
It's fascinating how governance can really make or break a project. The balance between decentralization and effective leadership is such a tightrope walk.
Right, and it's not just about the technology, it's also about the culture that the team fosters within the community. Engaging users in decision-making processes often strengthens the project.
Community engagement is crucial indeed. It's a significant factor in building loyalty, especially when users feel they have a stake in the platform's future.
Absolutely, Sabrina. However, we must also acknowledge that community sentiment can shift quickly, particularly in a volatile market. Misinformation can easily sway opinions.
That's a significant concern. How do you think projects can combat misinformation effectively?
Consistent communication and transparent updates are essential. Projects should prioritize educational outreach to ensure users understand the evolving landscape and potential risks.
Education could foster a more informed user base. But in a space that's constantly evolving, do you think it's realistic to expect users to keep up?
It's a challenge for sure. Project teams can help lessen the burden by providing easy-to-understand resources and hosting regular AMAs or webinars to address user concerns.
That sounds like a solid strategy. However, I wonder if the pace of innovation might outstrip even the most diligent